What we are going to learn today is accounting for investment. Now, accounting for investment is given under AS 13. So, practically, we are learning accounting standard 13. Try to concentrate. In a company, if I am an investor, say Mr. X is an investor. In a company, practically he is having three options, but right now, let us explore only two options. He can invest in debentures. He can invest in equity shares. Now, if you know how to write books of accounts of this investor under AS 13, practically you will know how to write down accounting of all the investment. Why? Practically there can be only two types of securities. One is fixed interest bearing securities. One is floating interest bearing securities. What does this mean? Debentures gives you a fixed rate of return. Equity shares does not give you fixed dividend. So practically if you know accounting of this two, you will be all for accounting of every type of investment. Try to concentrate when we are doing AS 13 accounting for investment. We are accountant of investor. So it is accounting in books of investor. Sir, accounting in books of company, we have already learned. Accounting of equity shares, accounting of debentures. Now we are doing accounting in the books of investor. And so only it is termed as investment account. See, debentures till this point of time, we have always understood it is a liability. But now debentures will be investment. And investment is nothing but asset. So if we are investing in some asset, how to write down books of accounts of investment as well as interest, that is what we are going to learn. So let us first start with accounting for debentures. First, let us understand some basics of debentures. Suppose if I have purchased 10,000 12% Reliance debentures, it will be having face value. Say it is having face value of rupees 100, and I have purchased this debentures at the rate of rupees 98. These are tradable debentures, so it is available from company also. It is available in secondary market also. Its purchase price is say rupees 98. Try to understand the first concept for accounting for debentures. That is record date. Now, what is the meaning of record date? Try to concentrate. Suppose a record date of this debentures is say 31st of March every year. What does this mean? Reliance will pay interest. Interest will be paid by Reliance on 31st March to the person who is owner of the debenture. Who is owner of the debentures? Say this is 31st March 2022. I am owner of this debentures. Then on this date, I will be receiving 12% interest. So what is the record date? Is a record date is a date on which interest is paid by the company to a person who is owner on that particular record date. So interest on 31st March 2022. I will be receiving how much? I am having 10,000 debentures multiplied by 100. Now try to concentrate first concept. Interest, coupon, dividend is always paid on face value. Interest is always paid on face value. At what rate I have purchased this debentures? 98. Interest is always paid on face value. So what is face value of debentures I am holding? 10,000 into 100. Or what is number of debentures I am holding is 10,000. So what will be the total face value I am holding is 10 lakhs rupees. What is the rate of interest? 12%. Try to understand, whenever the interest is quoted, it is always per annum. So if interest was paid 2 times a year, say 1st October and 31st March, then 6% will be paid on 1st October and 6% will be paid on 31st March. Total interest paid during the year will be 12%. But right now, only one time interest is paid, that was on 31st March. So I will be getting 12% on it. 10 lakh into 12% is 1,20,000 rupees. Interest will be paid by company to me on which date? 31st March. Sir, every year record date is decided? No, record date is decided at the time of issue of debentures. So at the time of issue of debentures, I am knowing that I will be getting interest on every 31st March on face value at the rate of 12% interest. Now this is the basics of record date. Let me explain you the logic of record date. Try to concentrate. Say Mr. Y is having a debenture on say 1/4/2021. He sells this debentures on 1/10/2021. He sells it to Mr. X. So what is holding period of Mr. Y? This is Mr. Y holding period. April to October, which will be 6 months. All right. Say Mr. X sold this to Mr. P on 28th of February 2022. So what is holding period of Mr. X? Will be October, November, December, January, February, that is 5 months. And on 28th February, Mr. X has sold this to say Mr. P. Mr. P, Mr. X has sold on 110. Y has sold to Mr. X on 110. Mr. X is selling to Mr. P on 28th February. And then our year ends. Our year ends on which date? 31st March. And say for this company, this is a record date. So this company pays interest on which date? Record date. What is holding period of Mr. P? Mr. P is holding for 1 month. And say this is one debenture. We are talking about one debenture which was holded by Mr. Y as on 1/4/2021. Then again on 1/10/2021, it was given to Mr. X. And then on 28/2/2022, it was given to Mr. P. Now, if company is paying on 31st March, try to concentrate. If company is paying interest on 31st March, then what company should technically do is give 6 months interest to Mr. Y, 5 months interest to Mr. X, and 1 month interest to Mr. P. This is technically what company should do. But company will not do this. Try to understand, there is one procedural problem and there is a technical problem also. Try to understand here, for this one debenture, say there are 3 parties. It is possible there are 10,000 parties during the year. Then company will have to calculate holding period of each and every individual and then transfer the interest to that particular account or that particular individual, which is a very hectic task for a company and which is not even feasible. See what company will do or what company will say. Company will say, we will open our membership book, membership of debentures. Who is the owner of the debentures on 31st March? In our case, for this one debenture, who is the owner on 31st March? Mr. P. Mr. P will be given 12 months interest. What is record date? The date on which the owner of the debenture is given full interest of 12 months or 6 months, whatever is applicable. If the interest is payable 6 months, he will be getting 6 months interest. If the interest is payable 12 months, he will be getting 12 months interest. So here, in our case, he will be getting 12 months interest. Now, Mr. P is benefited, right? So, Mr. X is at loss, Mr. Y is at loss. Practically, the answer is no. Believe me, once we will understand cum interest, X interest, we will understand how the interest is internally distributed between Y, X and P. But as far as the company is concerned, company will pay 100% interest to only Mr. P, who is owner of the debenture as on 31st March. Number one, there is a technical difficulty that a company will have to calculate interest for holding period. So this concept is not applied, and so company declares a record date. And believe me, it becomes easy for a company also. It becomes easy for the investor also. If I am selling it before 1 month of say record date, I will be knowing that this debentures right now is valuable, because after 1 month I am going to get 12 months interest. So I will be charging higher price and the interest will be adjusted. But as far as company is concerned, company pays interest on face value on record date, and it gives 100% interest to a person who is owner on the record date. This is the concept of record date. That is, we have clarified first concept of debentures, which is nothing but record date. All right, let us go to next concept, which is cum interest and X interest. Now, very important topic as far as investment is concerned. Try to concentrate. If understood, it is not difficult, but if not understood, it becomes somewhat difficult. I am owner of say 100 debentures of Reliance, which is carrying 12% interest, and I am owner from 1/4/2021. Who is the owner? Mr. I is the. I am evaluating something on 28th February 2020. That is after how many months? 11 months. I am planning to sell this debentures. What is the record date? Record date is say 31st of March. So when I am going to get interest, I am going to get interest on 31st March, and the next interest will be 2022. And when I am planning to sell, the face value of this debenture is 100, but the market price of this debenture is say 110 rupees. Now I am planning to sell this debentures. Try to concentrate. So if I want to sell this debentures, I will be getting 100 into 110 rupees. But try to concentrate. I am a fool if I sell this debentures on 28th February 2022 at 110 rupees. Why? I'll tell you. I have holded this debentures for 11 months. If I have holded this debentures for 11 months, if I hold it for 1 more month, I will be getting interest of 12 months. If I don't keep this debentures and sell this debentures, I will not be getting any interest, because what is the company's policy? We have learned it in record date. Company pays interest to the owner. Now, if I sell this debentures at this point of time, after 1 month, I am not the owner. I will not be getting a single penny interest. So, my plan to sell this debentures at 11,000 is not very nice because I am losing 11 months interest. And 11-month interest also will be calculating, but try to concentrate. Now the interest comes into factor. The person who is planning to purchase, I am planning to sell, but the person who is planning to purchase is, say, Mr. Ram. His name is Mr. So Ram will be very happy. He will be holding this debentures only for 1 month, but on 31st March, he will be getting 12 months interest. That's correct. Now, what I can discuss with Mr. Ram is this. Try to concentrate. I will tell to Mr. Ram that I will be charging 11,000 rupees for debentures. And how 11,000 rupees? I am having 100 debentures and I will be charging 110 rupees per debentures. So I will be practically charging 11,000 rupees for debentures, but as I have holded this debentures for 11 months, I will be also charging interest. How much interest? On 100 debenture, face value is 100 rupees into 12%. This is total interest of 1 year. So total interest of 11 months will be 11 divided by 12. So what will be 11 months interest? 11 months interest will be, this is 100 into 100 into 12% into 11 divided by 12. It is 1100 rupees. So interest 1100 rupees. And I am ready to sell you this debentures. You will have to pay me 11,000 rupees for debentures and 1100 rupees for interest, which will be extra. Are you getting it? This is my selling. Now, you will say, sir, still you are foolish because you are losing 11 months interest. No, I have taken 11 months interest. The company will not be paying me because I will not be owner on the record date. But I am taking this from Mr. Ram. I am telling to Mr. Ram that you will have to pay me 11 months interest, which is 1100 rupees. But per month interest is 100. And so 11 months interest will be 1100 rupees. And that I will be taking from Mr. Ram. So I have got market price of 11,000 rupees. And I have got interest of 11 months from company. No, from Ram. How much rupees? 1100 rupees. Now, Ram, from the point of view of Ram, is it a bad deal? The answer is no. Try to concentrate. Ram is purchasing 100 debentures at the rate of rupees 110. So he is paying 11,000 rupees for debentures. Sir, he is also paying 1100 rupees more, but Ram will be benefited, right? Not benefited, but Ram will be having that. How many months he is holding the debenture? 1 month? He will be getting 1 month interest. How? Company will pay to Ram 12 months interest, which is 1200 rupees. Ram has paid to Mr. I. How much rupees? 11 months interest. So it is 1100. He has paid. So what net Ram is getting is 1 month interest, which is nothing but 100 rupees. And Ram wants only 1 month interest. He is holder for 1 month. He will be getting 1 month interest. Now try to understand. Even if company is paying 12 months interest to Ram, we have done the transaction in such a manner that I is getting 11 month interest and Ram is getting 1 month interest. And this is how the settlement of interest on debentures is done between I and Mr. Ram. Try to understand. So we'll be taking same example and we'll be understanding cum interest and ex interest. Try to concentrate. If I tell to Ram that I will be selling you 100 debentures at the rate of rupees 110. But this figure is excluding interest. This figure is excluding interest. So, Mr. Ram, you will have to pay me interest separately. So, how much Mr. Ram will pay? It is 100 into 110, that is 11,000 rupees for debentures. Is interest included in this figure? No, interest is paid separately. It is written, this figure is excluding interest. So this figure is excluding interest. And what is the figure of interest? We have already calculated. It is 1100 rupees. For interest will be paid separately. And how much total money will be paid is the 12,100. Now, in books, we don't write down this full word excluding interest. What we write down is X interest. X interest is nothing but excluding interest. All right. Now, Ram is saying me, no, sir, don't give me this type of deal. Give me a deal where everything is included. Try to understand I am giving deal to Ram. Another deal, huh? This is not both the same deal together. Or I may tell to Ram, I will sell you 100 debentures at the rate of rupees 121 per debenture, but this will be including interest. Now you don't have to pay me that 11 months interest separately. Everything is included in this 121. See, it is like saying, if you want to join my class, I can give you class at 10,000 rupees including books. I will give you class at 10,000 rupees including books, where the books is of 1,000 rupees. Or I might say your tuition fees is 9,000 rupees and you will have to pay 1,000 rupees for books extra. This is the same thing. Try to concentrate. Total what you will be paying me is 10,000 rupees. Now understand, in this case, I am selling 100 debentures at 121 including interest and everything. So how much totally you will be paying me, or Ram will be paying to Mr. I, is 100 rupees into 121, which is nothing but rupees 12,100. Now, interest will be settled separately. Interest will be paid separately. No, because this figure is including interest. So this figure is including interest. And we already know how much interest Ram is liable to pay to Mr. I is 1100 rupees. So this 1100 rupees is included in this 12,100. And so this 1100 rupees is a portion of interest. What is this? For debentures and interest. This is portion of interest. And so net amount of 11,000 rupees will be for debentures. All right. And this figure 12,100 is including interest. In technical language, we term it as cum interest. I'm selling you 100 debentures at 121 cum interest. What is cum interest? Interest is included in this particular figure. So ultimately, what Ram pays to I is 12,100. For debenture, he pays 11,000. For interest, he pays 1,100. In this case, sir, in this case also, Ram pays to I 12,100 rupees. 11,000 is for debentures and 1,100 is for interest. Sir, what is the difference? Difference is just in writing. What is your fees? 10,000 including books. But I can tell you that your fees is 9,000 and you will have to pay 1,000 rupees extra for books. Your debenture cost is 9,000. You will have to pay interest extra 1,000. Or I can say your total cost is 10,000 including your books. Your total debenture cost is 10,000 including 1,000 of interest. So this is just a different way of saying the same thing. So cum interest, x interest. Cum interest is that figure is including interest, x interest is that figure is not including interest. This is a basics of cum interest and x interest. In each and every question we are going to learn cum interest and x interest, so it will not be a much problem because we will be practically calculating every point of time. But this is good for understanding the basics. Before going to investment account, let us understand, when I am investing the money, interest will be my income. Income will be credited to P&L account. The question is how much? So we have already done n numbers of times accountancy, which or how much interest should be credited to P&L account. Interest which is received in our year. No. Say our year is from 1/4/21 to say 31st March 22. Then interest during the year is credited to P&L account? No. Interest earned during the year should be credited to P&L account. So if I am an holder of the investment for 9 months, 9 months interest should be credited to P&L account. If I am holder of that debentures for 2 months, 2 months interest should be credited to P&L account. Whether I have received that interest or not received that interest. Say interest on drawings, also we have understood the same concept. Interest on capital, also we have understood the same concept. If I am borrowing money from my company, it is drawings for me. Interest on drawings will be levied only for the period of time I am using that money. If I am lending money to the business, I will be getting interest on capital only for the period of time I am lending the money. Depreciation will be charged only for the period I am using that particular asset. Say I have purchased the asset after 6 months, I will be charged depreciation. This is concept of accounting, and we will stick to concept of accounting but by a different way. What we are learning now is investment account. Let me draw the format of investment account. Debit side, credit side. In investment account, say in cash book, we draw 3 ledger accounts: cash, bank and interest, right? In investment account also we practically draw 2 ledger accounts. One is interest, another is cost of debentures. On credit side also interest and cost of debentures. Sir, what is first column for? First column is just an informative column. Here the figure does not come with journal entry. This is just for our information. See, first column is the number of debentures. So this is just for information that how many number of debentures I have purchased and I have sold. So these 2 columns are linked and these 2 columns are linked. Interest is the nominal account. Credit the income. So your income received will be credited. If it is the paid, it will be debited. Is it all right? If it is expense, it will be debited. Debenture is an asset. Debit what comes in, credit what goes out. If you purchase the debentures, it will come on this side. If you sell the debentures, it will come on this side. Okay. So it is practically an asset account as well as a nominal account, which is interest account. Let's start by taking a small example and we'll be understanding concept of debentures. Say my this investment account. Let me rub this first. This is investment account for 12% debentures of Reliance Limited. Sir, if I am also dealing in 10% debentures of Tata Limited, then investment account will be prepared separately. How many you have purchased, how many you have sold, what is the interest on that Tata debentures, everything will be calculated separately. Let us start with this 12% debentures of RR Limited. Face value is 10 rupees. Interest rate is 12%. We have already understood one concept, a record date. Record date is 31st of March. And this is in the books of Mr. I. For the period of 1/4/2021 to 31st March 2020. Excuse me. Try to concentrate. The first date is 1st April 2021. I will be having opening balance. Say my opening balance is 0. Alright. On 1/5/2021, I have purchased. Purchased means to bank. In bracket also I can write down it is purchased. How many debentures I have purchased? This is number of debentures. So how many debentures I have purchased? 10,000. As I have told you, this is just for my information. This has nothing to do with journal entry. So here the concept does not come with journal entry. Now, should you calculate the interest? Let me tell you a golden rule. Interest is always calculated. Sir, you are telling us to mug up. Yes, I am right now telling you to mug up, but please understand, I will clarify your each and every logic. Interest is always calculated. Whatever the figure is, interest is always calculated. Whatever the transaction is, interest is always calculated. From interest is always calculated from last record date up to transaction date. So interest is calculated. Yes, it is always calculated from last record date up till transaction date. Right now you need to mug up. I will be explaining you conceptually also how the interest figure comes, and ultimately we will derive that interest, whatever we write down in P&L account, will be earned during the year. So this is a golden rule. Interest is always calculated from last record date to transaction date. Now try to concentrate this transaction. How many debentures you have purchased? 10,000. Will you have to calculate interest? The answer is yes. 10,000 debentures multiplied by 10 rupees, which is face value, multiplied by 12%, which is interest rate. What was last record date for 1/5/2021? Let me do it over here. Which is the date? 1/5/2021. Which was the previous or last record date before this date? The record date always comes on 31st. What is the record date for this? Yes, 31st March. So last record date is 31st March. And which was the last record date? 31st March 2021. So last record date to transaction date, this is April, that is 1 month. 1st May, I am not calculating 1st May. So this will be into 1 divided by 12. And this is the interest portion. Let's start. 10,000 into 10 into 12% into 1 divided by, which is 1,000 rupees. 1,000 rupees will be which portion? Interest portion. Now it will be given in the question. What will be given in the question? You have purchased, say this is 1/5. Let me write down what will be given. 1/5/2021 purchased 10,000 debentures at the rate of rupees. At what rate it is purchased? Say 102 rupees. And it is X interest. Interest is included in this 102 or not? Not included. We have already learned what is the concept of X interest, right? And what is the interest over here? 1000. So how much I will pay total? 10,000 into 102. That is 102. 10,20,000 rupees. I will be paying 10,20,000 rupees. Does this include interest? No, interest is separate. And how much interest I will have to pay? I will have to pay 1,000 rupees extra as an interest. It is not 102. Let me take 12 rupees. Because the face value is 10. It can be 102 also. But right now I am taking 12. So what will be? 1,20,000. 1,20,000 is including interest, excluding interest, excluding interest. It is clearly written. So how much total I will have to purchase this debentures is 12,000 rupees for debentures and 10,000 rupees for interest. What is the journal entry? Debenture account debit. How much for work for I am paying for debentures? 1,20,000. Interest account debit 10,000. To bank 1,20,000. It is 1,000, not 10,000. Interest is 1,000. Total will be 1,21,000. How it will be posted? Debenture account debit side 1,20,000. So debenture account debit side is 1,20,000. Interest account debit side. This is interest account debit side 1,000. This is just for information. I will debited this to where 1,21,000 will be credited in bank account. So bank we are not drawing. So this is how we record it in cost of debentures. How much the totally I am paying is 1,21,000, 1,20,000 for debentures, and there is cost of debentures and 1,000 rupees for interest. Why I need to pay interest to the seller from the person whom I am purchasing as a seller? So why I need to pay him 1,000 rupees? 1,000 rupees is 1 month interest. And he was holder for 1 month. Try to understand. April, last interest he has got in March, 31st March. April he was holding the debentures, but now we will not be getting the interest of that 1 month from the company. Why? On record date I will be the owner of the debentures, so he will ask for 1 month interest which I need to pay him. All right, we are going to second date. Consider it is 1st February 2021. Again I am purchasing the debentures, so to bank, in bracket I can write down purchase, and they are 5,000 debentures. This is just for information purpose. Do I need to calculate interest? Golden rule. Interest is always calculated. It is calculated from last record date up till transaction date, and this is how I'll be calculating it. What is the transaction date? Transaction date is 1st February 2021. So it is 1st February 2021, which was, sorry, it is 2022. It cannot be 1st February 2021. It is 1st February 2020. So the last record date is 1st February 2022. Sorry, transaction date is 1st February 2022. Record date is 31st March. Which was the last record date is 31st March 2021. So April, May, June, July, August, September, October, November, December, Jan is how many months? 10 months. So how many months interest will be calculated? 10 months interest. It will always be calculated. There is no exception in it. Interest is always calculated from last record date to transaction date. What was the last record date to transaction date? It was 10 months. This is how I will be calculating interest. These are 5,000 debentures. Face value is 10. 5,000 into 10, 50,000 is total face value of debentures. into 12% is total interest into 10 divided by 12 will be my total interest, which is 50,000 is face value into 12% into 10 divided by 12, which is 5,000 rupees. Yes. So I will be paying 5,000 rupees to my seller. I am a purchaser. I'll be paying 5,000 rupees to my seller. Why I need to pay him? Because understand, he is holding this debentures for 10 months. I will be getting interest of 12 months, even if I am holding it only for 2 months. So 12 months I'll be getting, 2 months I will be 10 months I am giving him. So net interest what I'll be getting is 2 months. Let me write down even this transaction. Sir, this transaction where it will be written, it will be given in your question. Don't worry about it. So this is transaction of 1st February 2022. Purchased 5,000 debentures at the rate of rupees 11 cum interest. How much totally I will be paying? 5,000 into 11, which is 55,000. Is this 55,000 including interest, excluding interest? It is including interest. And what is the interest we have already calculated? 5,000. So 5,000 interest is already included in this. So this will be 50,000. What is this? Paid for debenture plus interest. Why plus interest? Because interest is included. It is already given. If I remove interest from it, this will be cost of debentures. All right. So debentures plus interest. Interest if I exclude, it will be cost of debentures. See how I will be writing it in my investment account. And already I have written 5,000 in interest column. So this is art of solving the question. First, write down interest. What is the total money I am paying? 55. But out of 55, 5 is for interest, which I have already written. So here I will be writing only 50,000. Also, this is cost of debentures what I am writing. All right. We are going to credit side, try to concentrate. On credit side, we have not sold any of the investment. So the direct date that will come is 31st of March. We are on credit side. What I am getting is interest. So in number of debentures, I am not selling anything. So it will not be credited. I am not selling anything. So on outer column also nothing will be written. I am just getting the interest. On how many debentures I will be getting interest? Total debentures. Because on this date, I am owner of this 10,000 also. I am owner of this 5,000 also. 15,000 into 10. Interest is always paid on face value. Multiplied by 12%. From last record date up to transaction date will be 12 months. You can use this, or you can even logically understand 100% interest, right? So full interest into 12 divided by 12, that is multiplied by 1. Is that all? This is 18,000 rupees. 15,000 into 10 multiplied by 12%, which is 18,000 rupees. So 18,000 rupees will be interest. What is this interest? Interest received on record date. This 18,000 rupees is nothing but interest received on record date. On total 15,000 rupees of debentures, I have received interest of 18,000. Sir, I will not be getting proportionate interest. No. As per holding period, no. I am owner on 31st March. I will be getting full-fledged interest as on 31st March. Let us go to again 31st March and let us close the books of accounts. How to close? Try to concentrate. By closing, which will become opening of next year. How many number of debentures I am having in closing? 15,000. This is closed. Again, this is a temporary account. It should not be posted anywhere. So it is just a closing. It is not a temporary account. It is just an informative column. It is not coming through journal entry. How to close the interest column? Try to concentrate. Here it is 18,000. Here it is 6,000. So what is a balancing figure is 12,000? On 31st March, this 10,000 will be transferred to which account? P&L account. Here it is debited. So in P&L account, it will be credited and my interest column will be. What is this? Believe me, it is interest earned. I'll explain you how. What is this? This is nothing but interest received. First, let me tell you that cost column. 15,000 rupees. Sir, should I not calculate interest over here? I should. There is no exception. Interest is always calculated. But which was the last record date? It was same. So last record date will be 0 days interest. Today only we have received the interest. And today if we are calculating interest, it will be 0. So interest is 0. What is cost of this 15,000 debentures? 1,20,000 plus 50,000. 1,20,000 is cost for 10,000 debentures. 50,000 is cost for 5,000 debentures. So 1,70,000 will be cost of this 15,000 debentures. And it is just a balancing figure which I am finding it out. And this account will also tell. This account will also. Sorry. Now, try to understand this 18,000 as I told you is interest received. This 12,000 rupees is nothing but interest which is earned. Sir, how it is interest earned? Let me first explain you in mathematical terms. It is interest earned which is during the year which can be credited to profit and loss account, because there is a strict rule for profit and loss account. It should be interest earned during the year. Here under consideration, there are two debentures, 10,000 debentures and 5,000 debentures. Try to concentrate. I am having two debentures under consideration. One is 10,000 debentures. One is 5,000 debentures. What is my holding period? Forget about record date and everything. For how many months I am holding that particular debentures? In current year. This I have purchased on 1st of May and I am not selling anything. So it is up till 31st March it is with me. So from 1st May to 31st March, May, June, July, August, September, October, November, December, January, February, March. It is 11 months. Only I am not holding in April. May to March I am holding it. So in current year, April I am not holding. May to March I am holding. So I am holding it for 11 months. So for this holding period is 11 months. Let me find out holding period of this 5,000 debentures. Holding period of 5,000 debenture is, I have purchased it in 1st February. So February and March, only 2 months. 2 months will be my holding period. Find out interest of this 11 months. It will be 10,000 into 10 into 12% into 11 divided by 12. So what will be the answer? 10,000 into 10 into 12% into 11 divided by 12, which is 11,000 rupees. Here it is 2 months interest. What will be 2 months interest? 5,000 debentures into 10 is face value into 12% into 2 divided by 12. This will be 1,000 if you calculate it. What is the total interest earned during the year? I am not talking about received. Will be 12,000. And believe me, this 12,000 is the same, this 12,000. Sir, how we have got it? That is a magic. We have actually used this golden rule, cleared our investment account, and ultimately what is transferred to P&L account is what should be logically transferred to P&L account, which is interest earned. And I have proved it. This is interest earned during the year, which is nothing but 12,000 rupees. Always this will be 12,000 rupees. Pause your video for a second and think how this magic happened. This is interest received. This is interest earned. How the interest received is not transferred to P&L account and automatically interest earned is transferred to P&L account just by following an art of solving investment account. Pause the video for 5 seconds and then you can just answer it. I'll give you answer in 2 minutes. So you might have got the answer. Try to concentrate if you have not got it. For 10,000 debentures, I am getting over here 12 months interest, and for 5,000 also I am getting over here 12 months interest. So total I am getting for 15,000 debentures. How many months interest? 12 months interest. Let us concentrate on 10,000. Let me change the color. This 10,000 debentures, I am getting 12 months interest. Try to understand. Getting 12 months interest. And I am paying 10 months interest. Sorry, not 10 months, 1 month. I am paying 1 month interest. Getting 12, paying 1. Net is 11. Getting 12, paying 1. Net will be 11. Getting 12 months interest on that 5,000 debentures. Paying 10 months interest. Getting 12. I will get always 12 months interest because I am owner on the record date. And paying how much? 10 months interest. So net is the 2, which is nothing but my holding period, which is this is nothing but 2. So this is not for exam. I am just proving it that whatever, if your answer is correct, whatever you transfer to P&L account is interest earned. Once again, I'm just clarifying all the figures of interest. Otherwise, the question is easy. 18,000 rupees is interest received. 12,000 rupees is interest earned. 1,000 rupees I am paying to seller because he was holding this investment for 1 month. I need to pay him 1 month interest. This 5,000 rupees also I am paying to seller because he was owner for how many months? 10 months. And this is how we draw investment. This is basic investment account. Let us continue with investment account and let us take a detailed example of it. So let me dictate you the question. This is investment account. As I told you, it will be having particulars, one fake column or just an informative column, which is number of debentures. Second column will be interest, which is nominal column, debit the income and debit the losses and expenses, credit the incomes and gains. So whatever interest is paid, I will be debiting. And another is cost of investment. So this is a debenture column. Debenture is an asset. Debit what comes in, credit what goes out. Again on credit side, number of debentures, interest and cost of debentures. This will how my investment account will look like. In previous question, we have not taken opening balance. Let us in this question take opening balance. Say, opening balance, let me take another pen. Opening balance, let me give some additional information regarding it. These are a 12% investment. The record date is say 31st December every year. So 12% interest is paid every year on 31st December. There is only one record date. We'll be getting n numbers of questions which are having multiple record dates. That is, interest is paid every 6 months. This is 31st December, which is record date and which is 12% investment. My opening balance or my year is 1/4/2021 to 31st March 2022. So opening balance will be as on 1/4/2021. How many debentures I was holding? I was holding 10,000 debentures. At what cost? At the cost of rupees 1 lakh. What is face value of debentures? Face value of debenture is 10. Per debenture face value is rupees 10. I was having 10,000 debentures which a cost of rupees 1 lakh. Sir, should I calculate interest? Please understand, whenever the concept comes of interest, interest is always calculated. There is no exception to it. Whatever questions we'll be doing in classroom, interest is always calculated. Switch off your brain. Interest will be calculated. And the way of calculating interest is also same. It will be calculated for the period from last record date to transaction date. The specs. Interest number one is always calculated from last record date to transaction date. Sir, we have mugged up and we can solve the question. I will be telling you logic also why we are calculating interest in opening balance. But first let us calculate it. Let me change somewhat cost so that it becomes somewhat relevant. 1,20,000. So what will be my interest? Interest is always calculated on face value. 10,000 debentures into face value 10 into 12%. Last record date would be 31st December 2020. This is 1st April 2021. So 31st December 2020 will be last record date. How many months? January, February and March. So 3 months into 3 divided by 12. This will be my interest, which will be 1 lakh multiplied by 12% divided by 4 is 3,000 rupees. Sir, what is logically this 3,000 rupees? Let us complete the question and we'll be going into detail why we have calculated the interest. But as far as problem solving is concerned, you should always calculate interest. The way of calculating interest is also same, which is last record date to transaction date. And I'm telling you, there is no exception to it. It is always calculated. Opening balance, closing balance, purchase, sale. It is always calculated. Another transaction which I've done is on 1/9/2021. I have purchased. So to bank, in bracket I can write down purchase. Why to bank? Because when you purchase the debentures, the journal entry is debenture account debit, interest account debit to bank. How many debentures you have purchased? I have purchased 5,000 debentures. And let me give you the information about this debentures. On 1/9/2021, purchased 5,000 debentures at the rate of rupees 12, 13 per debenture X interest. So what would be my purchase price? 5,000 into 13. First let me do this. How I will solve the question? This is the art of solving the question. How I will solve the question? I will always calculate first the interest. Let me first calculate the interest. 5,000 into 10. Interest is always calculated on face value into 12% into, which was the last record date, 31st December, which is this 1/9. So 8 months, January, February, March, April, May, June, July, August. 8 months interest will be calculated into 8 divided by 12. What is the interest first? 5,000 into 10 into 12% into 8 divided by 12, which is 4,000 rupees. Always calculate the interest from last record date to transaction date. I have purchased this debentures at the rate of rupees 13. Excuse me. So it will be 65,000. Sorry. 65,000 is cost of debentures plus interest. No. Why? This 65,000 rupees is excluding interest. It is not including interest. It is excluding interest. So interest of 4,000 rupees will be paid separately to the seller of the debentures. See, what seller is saying is, you need to pay me 65,000 rupees for debentures, which is not including interest. Why interest? Seller has holded this debentures for 8 months. See, he is selling from 1/9. The interest will be received on 31st December. But full interest I will be receiving. Why? I am the owner of the debentures as on record date. He will not be receiving anything. And so he says, I am holding it for 8 months. You give me interest of 8 months. So I will be paying 4,000 rupees, not included in the 65,000 rupees as interest. I have paid 4,000 rupees interest. What I will pay for debentures is 65,000 rupees separately. So total what I will pay is 69,000 rupees. I'll even give you the journal entry. What is the journal entry? Debenture I have purchased for 65,000. So debit. Interest is my expenditure. So it is debit. To bank 69,000. Debenture account debit side 65,000. Interest account debit side 4,000. To bank 69,000. This will be journal entry for this particular transaction. This I am paying to the seller as an interest because he is holding for 8 months. This is one purchase transaction. Let me go to sale transaction. Sale was done on say 1/12/21. Again by bank because you will be receiving money if you sell the debentures. How many debentures you have sold? 4,000 debentures. Now, how many debentures you are having? Excuse me. How many debentures you are having? 15,000. You have sold how many debentures? 4,000. So how much you are having now? 11,000. But the question arises whether I have sold the debentures from this 10,000 or whether I have sold this debentures from this 5,000, because the rate is different, the cost is different. Here comes the various method of calculation. FIFO, LIFO, weighted average method. What is FIFO method? First in, first out. What does it mean? This 4,000 debentures are sold from this 10,000. What is LIFO method? This 4,000 debentures are sold from this 5,000. What is weighted average? The 4,000 debentures are sold from both the lots in average. Alright. Let us assume in this question FIFO. So first in, first out. So it is sold from this lot. Alright. Should I calculate interest? What I told you, answer is always yes, and the technique is also same. Last record date to transaction date. So first let me calculate the interest. 4,000 into 10, which is face value, into 12%. Last record date was last 31st December. Last 31st December to 1st December is 11 months, into 11 divided by 12. This will be my interest. 4,000 into 10 into 12% into 11 divided by 12, which is 4,400 rupees. The answer is in rupees. 4,400 rupees. This is interest. Let me write down the transaction which is happening. This will be given in your question, right? 1/12/21 sold 4,000 debentures at the rate of rupees 15 per debenture cum interest. So what I have told to the purchaser, you pay me 15 rupees per debentures, which is inclusive of your interest. So you don't have to pay me interest separately. Have we calculated interest? Yes, we have already calculated interest. Let me do the calculation. I will be selling it at 4,000 into 15 rupees, which is 60,000 rupees. This is my selling price of debentures or debentures plus interest. It is debentures plus interest because this price includes interest. Let me remove interest. What is the interest? I already calculated 4,400. Which purchaser will give me as an interest separately, or it is included in the 60,000? It is included in the 60,000. So what I will be net receiving for debentures is 55,600 rupees. So what total I will be receiving? 60,000, 4,400 for interest and 55,600 for debentures. I will not be getting 60,000 plus 4,400. That is X interest. That is cum interest. What is the meaning of cum interest? In the 60,000 interest is already included. So for debentures, I am getting 55,600. What is this? Is my cost price or selling price? This is my selling price. Please try to concentrate. Is it all right? I am posting this 4,400. I would have always written because always I first calculate interest, and my selling price is 55,600. Now there is a problem. Try to understand. You are maintaining a stock account, debit what comes in, credit what goes out, and that stock account is maintained at cost. What is the problem? The problem is this is a selling price. This 55,600 is selling price. If you will write down selling price in cost column, your account will not tally. So see the art of writing this. Here I will be writing selling price. But on counter side, over here, which is the date 1/12/21, I will transfer profit to credit side of P&L account, which I'll be writing it over here. And what is the profit? For that, I will have to find out cost price of this 4,000 debentures. I'm having selling price of this 4,000 debentures. Now I will find out cost price of this 4,000 debentures. Please concentrate. Cost price of this 4,000 debentures. It is very easy. We have decided FIFO method, so the debentures are sold from this lot of 10,000. That 10,000 debentures costed 1,20,000. Then this 4,000 debentures will cost how much? Simple cross multiplication, I'll be getting cost. It will be 48,000. Let me just calculate it. 4,000 into 1,20,000 divided by 10,000, which is 48,000. So what is the cost of this debentures? 48,000. What is 48,000? Cost of debentures. Is it something which is having a cost of 48,000, which is sold at 55,600, will be having profit, and profit of how much? 55,600 minus 48,000, that is 7,600 profit. Let us go again to investment account. In cost column, I have written selling price. And on counter side, if I write down profit, say I'm writing it down. What is the profit of this 7,600? Now see what is the net effect which I am giving. Net effect which I am giving is 55,600 credit and 7,600 debit. So net effect what I am giving is 48,000, and 48,000 is nothing but cost of debentures. So net amount in cost column, I am writing cost only. But what is the way of writing it? The way of writing it is when I sell the debentures, I write down selling price on credit side and I transfer 7,600 on debit side, which will be having a second entry in profit and loss account credit side. So what is the journal entry? Is debenture account debit to P&L, right? So P&L account will be credited by 7,600, which is nothing but profit on sale of debentures. So this is just a way of writing it. I don't directly write down 48,000 over here, right? I don't do this. So I write down 55,600 selling price, and on counter side I write down profit. Let me go ahead into the question. Now comes record date 31st December 31/12/2021. I will be getting interest by bank, interest bank account debit to interest account credit by bank. But here debentures cost and number of debentures are not affected. What will be affected is only interest. Interest will be getting on how many debentures? Very simple. I was having 10,000, then I purchased 5,000, total 15 minus 4, which I have already sold. I will not be owner of this debentures on record date. So what is net I am holding is 11,000 debentures. On 11,000 debentures, 10 rupees face value, I will be getting 12%. Sir, you told you should always calculate from last record date to transaction date. If you will calculate last record date to transaction date, ultimately it will be into 12 divided by 12. It will be 12 months interest. So ultimately you are owner of the debentures of 11,000, and on record date you will be getting interest on it. 11,000 into 12%. It is 13,200. 13,200 is interest which you will be receiving. No other transactions are there as far as debentures are concerned. So we will be closing our investment account for current year 21-22. The last date is 31st March 2021. By closing, how many debentures I am holding as on the closing date? 11,000 debentures. This account will be closed. Also, this is just an informative account. Sir, should I calculate interest? Answer is always yes. From last record date to transaction date. What was the last record date? 31st December. And this is which date? 31st March. So January, February, March. It is 3 months interest. You should calculate it. Sir, what is logic behind it? I'll tell you. Into 12% into 3 divided by 12. January, February, March, which is 1,10,000 into 0.12 multiplied by 3 divided by 12, which is 3,300. Excuse me. What is closing balance, or what is cost of this 11,000 debenture? I'll give you first simple technique, and then I'll explain you that our answer is correct. The simple technique is balancing figure. What is balancing figure? Let me calculate it. 1,20,000 plus 65,000 minus 7,600. Sorry. Plus 7,600 minus 55,600, which is 1,37,000. So this answer is 1,37,000. Sir, how we will come to know that this 1,37,000 is cost of this 11,000 debentures? I can logically also prove it. Try to concentrate. How I am proving it logically. This 10,000 debentures, now I am holding only 6,000 debentures. From this 10,000 debentures, I am holding only 6,000 because 4,000 is sold by FIFO method. So only 6,000 debentures. What is cost of that 6,000 debentures? And which are remaining 5,000 debentures? Remaining 5,000 debentures are this debentures. Right. What is cost of that debenture? 65,000. So 5,000 debentures. What is the cost? 65,000. What is cost of the 6,000 debentures? Again, very easy cross multiplication. 10,000 debenture is costing 1,20,000 rupees what will 6,000 debenture cost? It will be 72,000. If you do this cross multiplication, it will be 72,000. The total answer will be 1,37,000, which is nothing but this. So is it justified that 11,000 debentures are costing 1,37,000? This is nothing but this particular point. So we are through with the investment account as far as the debenture is concerned and number of debenture is concerned. Let us go to interest column. Interest column, balancing figure will always be over here, which will be transferred at the end of the year to P&L account. How? 4,400 plus 13,200 plus 3,300 minus 7,000 will be 13,900. So 13,900 rupees will be transferred to P&L account. I've told you in previous lecture, what is the 13,900? Interest earned. 13,900 is nothing but interest earned. Last time I am proving it in the classroom that actually this figure is interest earned. How? Try to concentrate. Out of this 10,000 debentures which were initially purchased, 6,000 debentures, you are keeping it for full 12 months because they are never sold. So you are holding it for 12 months. 4,000 debentures which were sold. When it were sold? 4,000 debentures were sold on 1/12. So you are holding in current year for how many months? April, May, June, July, August, September, October and November. You are holding it for 8 months only. This 4,000 debentures out of this opening balance, you are holding it for 8 months. That is April, May, June, July, August, September, October and November. So you are holding this for 8 months. Remaining 5,000 debentures which you have purchased new. You have purchased it on 1st September. So you will be holding it for how many months? September, October, November, December, January, February and March. So you are holding this for 7 months. All right. September to March. At the end of the year also these debentures are not sold. So at the end of the year also you are holding this. So you are holding this debentures for how many months? You are holding this debentures for 7 months. Let me calculate the interest. 6,000 debentures into 10 into 12% into 12 divided by 12. That is 1. 4,000 debentures into 10 into 12% into 8 divided by 12. 5,000 debentures, face value is 10, 12% into 7 divided by 12. This will be 7,200. This will be 40,000 into 12% into 8 divided by 12, which is 3,200. And this will be 50,000 into 12% into 7 divided by 12, which is 3,500. So this is the total interest which I have earned. Earned is not received. This is total interest which I have earned during the current year. And what is the total for it? It is 7,200 plus 3,200 plus 3,500, which is 13,900, which is nothing but interest earned during the year 21-22. This should be transferred to P&L account as per accounting logic, and believe me, this will be transferred to P&L account, which is the same figure 13,900. Once again, I have proved that this is interest earned. Let me take 1 or 2 more points. First, let me take this closing interest. Sir, what is this? Because our record date is 31st December. We cannot receive this debentures interest on 31st March. We cannot tell to company that our closing year is 31st March. So you give us the interest on 31st March. But which was the last record date? 31st December. January, February and March have already passed. So they are all done. January, February, this is today is 31st March closing date. We have earned that interest, but we have not received it. Now, interest earned and not received is recorded in books of accounts. Yes, it is my current year's income. We are not writing books of accounts on cash basis. We are writing books of accounts on accrual basis. So, interest earned but not received should be transferred to P&L account. It will be transferred to P&L account only if we write it down on credit side. So logically, what is this 3,300 is nothing but interest earned specifically of January, February and March 2022, but not received. If I'll write it down over here, automatically it will be transferred to P&L account. Let me see all the figures. This is interest received. On record date, right? 13,200. This is interest received from purchaser. Because we were holding the debentures for 11 months and now we are selling it, we will take that 11 months interest from purchaser. This is interest paid to seller. As a seller was holding this debentures for 8 months, we will be paying him 8 months interest. This is having same logic as of closing. This is interest earned but not received, but of previous year. Means in current year it should not be transferred to P&L account. It will be received in current year because it was not received in previous year. But it is not income of current year. So it will be received in this, but not income of current year. So I am writing it on debit side and automatically while transferring to P&L account, it will not be considered. This is all logic of interest. Opening balance as well as closing balance. So this interest also should be absolutely clear. Why we are calculating interest? Yes, logically everything if clear, you will enjoy doing investment account. Otherwise, by this one, just by this one rule, you can solve the question. You will be getting the answer. All the figures will be correct, but you will not be understanding what actually you are doing. So if someone asks you what is this, you should be able to tell that it is interest not received, but it is earned. So it should be transferred to P&L account. So I am writing it on credit side. This is same having opposite reason. This is interest paid to seller. Why? Because he was holding the debentures for some period, but he will not be getting interest on record date. Interest received because we have sold the debentures, we have holded the debentures for some period, but we will not be received. So we will be taking it from purchaser. This is interest received on record date and this is interest earned. This is interest earned. So this should give you conceptual clarity of how we are recording and why we are recording the interest in a particular way, which is already given. Once again, also I have proved that this figure which will be transferred to P&L account, assuming everything is correct in our investment account, will always be interest earned. Please understand this portion is not for exam purpose. It is just for understanding purpose. Right? For making it absolutely clear, I have done this. Don't do this in exam. You don't have to prove anything in examination. Neither you have to prove this figure in your examination. But the point is that I'm just explaining how these figures are derived so that the concept is absolutely clear. Let us continue with the investment account. Up till now, what we have learned is investment in fixed interest bearing securities where the interest is received on record date, right? So if you are investing in debentures, if you are investing in bonds, even if you are investing in fixed deposits, whatever we have learned up till now will be sufficient. You can draw investment account for each and every individual securities. What we are going to learn now is, if you make an investment where return on security is not fixed. So, number one, rate is also not fixed. Number two, whether you are going to receive it or not is also not fixed. Sir, which are this type of securities are equity shares? So, if you make investment in equity shares, you will be receiving interest. No, the name is dividend. You will be receiving dividend. On which date? You cannot say, it is not fixed. What rate? It is not fixed. Whether you are going to receive or not is even not fixed. We are talking about investment where the rate of return is not fixed. Understand, even if the company is a profit earning company, so even if the company is earning profit, it is not compulsory for a company to issue equity dividend. So we are going to understand how to record this type of investment account. If you are doing investment in equity shares, how to record it. So let us take a small example. Let us say I have made investment in X Limited. Say I'm making investment in shares of XYZ Limited. I will be drawing investment account, particulars. This is just an informative column, number, revenue income, which is normally transferred to P&L account, and cost of the investment. Again, on credit side, particulars, number of equity shares, revenue, and cost. I am preparing books of accounts from 1/4/2021 to 31st March 2020. In opening balance, I will be having 1/4/2021. I am having opening balance. How many equity shares? 5,000 equity shares. Now, in fixed interest bearing securities, there was a rule. We were always calculating interest. But here there will not be any outstanding interest. There will not be any interest for holding period for which I was holding the particular security, because there is no record date. There is nothing like record date, because whether you are going to receive or not is not fixed. No one can say when it will be received, right? So there is no accrued income, there is no outstanding income, there is no interest or dividend payable at the time of purchase or sale. Nothing will come. And this were purchased at say 100 rupees, so 5 lakhs rupees. Right. So 100 rupees per share. I am having opening shares. How many number of shares? 5,000 shares of XYZ Limited at the rate of rupees 5 lakhs. See what is happening on 6th June 2021. I am purchasing more shares of XYZ Limited to bank in the bracket purchase. It is a real account. Debit what comes in, credit was goes out, shares are coming in, so it will be debited. I have purchased more 10,000 shares at the rate of rupees 120. So at a cash cost of rupees 10 lakhs. So on 6th June, I am totally having 15,000 shares. Now try to concentrate. What is happening on, say, 30th June 2021? On 30th June 2021, I receive bonus shares. What are bonus shares? Bonus shares are shares which are received to existing shareholders free of cost. Nothing is payable to the company. Company will just give this bonus shares to the investor. Receives bonus shares in the ratio of 2:1. So what does this mean? If you are holding 2 shares, you will be getting 1 share. How many you are holding? I am holding total 15,000 shares as on 30th June. So I am holding 15,000 shares. Then how many shares I will be getting? Cross multiplication, I will be getting 7,500 shares. That too at free of cost. Let me talk something about bonus shares. Bonus shares, from the point of view of investor, they are free shares received from the company. As far as company is concerned, sometimes they will use this sentence even in your question. For a company, bonus shares are capitalization of profits. Why it is termed as capitalization of profits? Try to concentrate. Say this is balance sheet of XYZ Limited. Now it is having capital, equity share capital of say 100 crores, and it is having reserves of say 200 crores. Say bonus shares of capital 50 crore rupees is declared by this company. What is the journal entry when bonus is issued? One will be simple, is to equity share capital will be credited, right? Because company is issuing shares free of cost. What will be debited? Bank? No. Why? Company is issuing free of cost, so it will not be receiving money. If they are not receiving anything, it is their loss, or they will issue this bonus shares from reserve. So reserve account debit to equity share capital. This is not exact journal entry which is passed. Exactly it is reserve to bonus to equity shareholders and bonus to equity shareholders to equity share capital. Is it all right? But net entry is this, right? Reserves of 50 crores to equity share capital 50 crores. How your balance sheet will change? 50 crores will be deducted from here and 50 crores will be added over here. This is the only change happening in your balance sheet. Now try to understand the name. Capitalization of profits. Converting profits into capital is nothing but issuing bonus shares. So sometimes the question will say the company is issuing bonus shares. Sometimes the question will say company is capitalizing its profits. But it is received to shareholders free of cost, and investment account is from the point of view of investor. So we are receiving 7,500 shares free of cost. Receiving means we will be debiting to not bank bonus because we are not paying anything. How many shares? 7,500. At what cost? 0. So this was the first idea of bonus. Second, let us sell this goods or sell the shares. How many total shares we are having? We are having 15,000 plus 7,500, that is 22,500 shares, out of which I am selling some shares. If I'm selling some shares, it will go on credit side. Buy bank, sale, credit, what goes out? How many shares I am selling? I am selling 12,000 shares. At what rate I am selling? Your interest will not be calculated. See, it becomes easy as far as calculation is concerned, because in fixed interest bearing securities, in debentures, in bonds, you will always have to calculate interest. There is a rule. Always calculate interest from last record date to transaction date. But here you will not calculate interest for anything. There is no interest which is due. 12,000 shares are sold. Let me draw a working note. 12,000 shares are sold at the rate of rupees 130. So I will be receiving 12,000 into 130 rupees, that is 15,60,000. So I will be receiving 15,60,000, and this is happening on 25th July. You are selling 12,000 shares at the rate of 15,60,000. Now, nothing is given about LIFO, FIFO. Now, first thing you need to understand, this is cost. This is the sales price. You cannot write down selling price in cost column. So what we do, we have done this in fixed interest bearing securities. We write down profit on opposite side. So sales price minus profit will give me answer of cost. And ultimately, I can record cost in it. So selling price minus profit on which side? Debit side. I will be getting answer of cost. All right. So selling price is written on credit side. Let me find out the profit. This was a sales price. What is the cost of this 12,000 debentures? I need to find out. All right. Should I consider FIFO, LIFO? If nothing is given in fixed interest bearing securities, in debentures, you should assume FIFO. But if nothing is given or even FIFO is written, you should always calculate equity shares by average cost method. Why? Your 7,500 bonus shares are free of cost. So overall cost per share will decrease. You should always consider average, weighted average method as far as finding out cost of equity shares sold. So I will be taking average cost. How to take average cost? What are the total number of shares I am holding? 22,500. What is cost of this 22,500 shares? 12 lakhs plus 5 lakhs, that is 17 lakhs. If 22,500 shares are costing me 17 lakhs rupees, then what is the cost of 12,000 shares? 17 lakhs into 12,000 divided by 22,500. That is 9,06,667. 9,06,667 will be cost of what? 12,000 shares. Let me find out profit. What is selling price? 15,60,000. What is cost? 9,06,667. Remaining thing will be my. So 15 lakh 60,000 minus 9 lakh 6,667 is 6 lakh 53,333. 6 lakh 53,333 will be profit on sale of this equity shares. Profit, I write it down on debit side, 25,7. I will transfer it to P&L account. The profit is the 6 lakh 53,333. See what is net recorded. On credit side, I have recorded 15 lakh 60,000, and on debit side, I have recorded 6 lakh 53,333. So net what I am recording is credit 9 lakh 6,667, which is nothing but cost. This we have even done in investment account where we were doing fixed interest bearing securities, that is normally debentures. In cost column, this is like trading account. You write down sales on credit side at cost plus profit. So on debit side, what you get is profit. So we have considered concept of sale. Now we are going to another concept, which is right shares. Before that, let us take one more sale transaction. On, this was 25th July, right? On 1st August. Let me make it easy for right shares. So this is 22,500 minus 12,000 is 10,500. I am selling another 500 shares. I am selling it at 120. So it will be 60,000 rupees. I will have to find out cost of the 60,000 shares. The cost will remain same because average cost has remained same. There is no another purchase or there is no other cost which is happening. So the cost will remain same. Cost of 500 shares. 500 shares is how much? If 22,500 is 17 lakhs. 17 lakhs into 500 divided by 22,000, which is 37,778. 37,770. You have sold it at 60,000. Your cost price is 37,778. So you are earning a profit of 60,000 minus 37,778, 22,222. So there is the profit of on 1/8/21. There is a profit of 22,220. So two sales transaction, one of 12,000, another of 500. Similar way we have found out profit and return it on debit side. So total how many shares I was having? I was having 22,500, out of which I have sold 12,500. So now I am holding 10,000 shares. Now, company issues right shares. What are right shares? Try to concentrate. Right shares are shares, or they are not shares even. It is a right given to existing shareholders to purchase company's share. It is not free of cost. the company will first give chance to existing shareholders to purchase company shares. Whenever company is issuing the shares, it will first give chance to existing shareholders to purchase the shares. Now you will say, sir, why investor will purchase from right shares? They will not purchase it from market. Right shares are normally quoted at a lower price. So it is beneficial for the investor to purchase this particular type of shares. So this is a right shares and it is a right. Try to understand. It is not like bonus that it will be automatically credited to the shareholders account. Here the company will just say this. Say in our case XYZ Limited is giving a right in the ratio of 1:1. What does it mean? If you are holding one share, you will be getting right to purchase one share at the rate of rupees 50 per share. Please understand, these shares are not free of cost. These shares are issued at one price, which will be normally lower than the market price. So it is beneficial for investor to purchase at 50 rupees because say in market the rate is 60 rupees. Alright. Say market price, let me write down even. Market price of this share is rupees 60. We are investor in XYZ Limited and this right is given to us on 1st October. So it is 1/10/21. This right is given. I am holding on 1st October how many shares? I am holding 10,000 shares. I will be getting right in the ratio of 1:1. So I will be getting right to subscribe. Subscribe is same as purchase. How many shares? 10,000. I will be getting right and not compulsion. I can purchase 10,000 shares if I want at the rate of rupees 50. But I am not purchasing yet. I have not done a purchase transaction right now. So it is just a right to subscribe for shares. They are not actual shares which I am receiving. Yes. Now I can decide whether I want to purchase just 10,000 shares or do not want to purchase just 10,000 shares. Understand, I purchase 6,000 of this shares at the rate of rupees 50. I actually purchase it. So can you actually purchase the shares? The answer is yes, you can always purchase the shares. The point is, when I purchase the 6,000 shares at the rate of rupees 50, I am actually purchasing it, where I will be writing it my investment account. I am purchasing the shares. Debit what comes in? 2 free or I will have to pay? I will have to pay. I am purchasing 6,000 shares at the rate of rupees 50. So it will be 30,000 rupees which I have purchased. The question is, can I purchase only 6,000 shares out of 10,000? Yes. Company will give you right to purchase all of the shares or any of the part of it. So you can purchase 6,000 shares. That is number one. Most important point, try to concentrate. I am still having right to purchase 4,000 shares. If I'm still having right to purchase 4,000 shares, I can still purchase 4,000 shares, but I don't want to purchase it. can I sell this right? Not the shares. Can I sell this right to someone else? Why someone else will purchase is a second question. We'll be dealing with that also. But can I sell this right to someone else? The answer is yes. I am not selling this 4,000 shares. I am selling right to subscribe this 4,000 shares to one of my friend, Mr. X is purchaser of the shares or purchaser of this right, purchaser of this right. And I will charge 6 rupees for selling that right. Sir, your share is worth rupees 50. Why you are selling at 6? I am not selling the shares. I am selling right to purchase the shares. This right was with me. Now I am giving it to Mr. X that okay, I don't want to purchase this 4,000 shares. You purchase this 4,000 shares. But the right was with me. Now I am giving it to you. So I will charge 6 rupees per share right. And so I will be charging 24,000 rupees. Which is income or expenditure for I? It is income for me. 24,000 is income, and as per AS 13 accounting for investment, this income is revenue and should be transferred to profit and loss account. It will not reduce your cost. It will not do anything else. It will be transferred to profit and loss account. So in my books of accounts, I'll be writing it in revenue column. On 110, I have received 24,000. My equity shares will not be affected, right? I am not purchasing or selling this 4,000 shares. And this 24,000 will be ultimately transferred to profit and loss account. On credit side of P&L account, it will be transferred to profit and loss account. So this is nothing but right to purchase the share is sold. The question, why sir Mr. X will purchase this type of right at the rate of rupees 6? Try to concentrate. For Mr. X, he wants to purchase this 4,000 shares. So for Mr. X, he will be purchasing this 4,000 shares which is available at 50. Start. Also he has paid 6 rupees for right. So what is the effective cost of Mr. X? 56. 50 rupees it will be giving, he will be giving to company, and 6 rupees he has given to me. So what is his net cost? 56. It is still cheaper for him because market price is 60. If he today goes into market and purchase the shares, it will be at 60. If he takes right from me at the rate of rupees 6 and then purchase the right shares at the rate of rupees 50, still his effective cost will be 56. So Mr. X will be purchasing the shares. Why Mr. I will sell the shares is very easy. He did not want to purchase the share. He want to encash that right which he has received, and so he is encashing that right which is received. But as per AS 13, remember it should be treated as a revenue income and should be transferred to profit and loss account. Also, fundamentally also it is correct. Understand, if you are investing in equity shares, this is your normal business income, should be transferred to profit and loss account. This was right shares and right to subscribe for shares. We are going to next point, which is good, which is difficult. Normally student thinks it is very difficult, but believe me, it is not. We are going to learn bonus. Bonus is a profit which is given by company to shareholders. So we are investor or shareholders. So for us it is income. Bonus is income. My mistake. It is dividend, sorry. We are talking about dividend. Dividend is income for us. Distribution of profit by company to shareholders. Now try to understand the general rule of dividend. Dividend of 1819, year 1819, will be declared and paid in 1920. Dividend of 1920 will be paid and declared in 2021. And similarly, dividend of 2021 will be paid and declared in 21-20. See, income tax and dividend are having same effect. Previous year's income tax and calculation will be done in next year. Same as dividend. 1819 dividend will be paid in 1920. 1920 dividend will be paid in 2021. 2021 dividend will be paid in 21-22. Now you will say, sir, this is not termed as previous year dividend. No, it is termed as normal dividend. If the word dividend is written, it means this. If you have received it in 1920, it is of 1819. If you have received it in 2021, you are in you have received of 1920. If you have received in 21-22, if you have received in 21-22, our year is 21-22. If you have received in 21-22, then that dividend belongs to 2021. Let me draw this. I have received it in my current year, which is 21-22. So, dividend is of year 2021. 2020. Is it all? Now, it is declared on which date? Say 1st December. Dividend is declared on 1st December 2021. Now this becomes record date for dividend. On this date, the person who are owner of the shares will be receiving the dividend. All right. So you are owner of how many shares right now? You were owner of 10,000 and you have purchased 16,000 shares. So you will be receiving dividend on 16,000 shares, which will be your income, will be transferred to profit and loss account, or will be reduced from cost. If it is transferred, we are going to take one more example and try to understand this. Whenever we receive dividend and interim dividend, we are going to take one more question. But whenever we are receiving dividend or interim dividend, it will be transferred to P&L account or it will be reduced from cost. When it will be reduced from cost or when it will be transferred to P&L account, it depends. And that is what we are going to learn. First, let us close this question. We have received the dividend on 112 by bank. Some will be received over here. Some will be reduced from cost. Reduced from cost is written on credit side. We are going to understand it in next question, that how it is reduction from cost and why it should be written on credit side. And this will be my on 31st March 2022, I will be finding out what will be net transferred to profit and loss account. Also on 31st March 2022, I will be preparing closing 16,000. Balancing figure will be cost of this 16,000 shares. I'll be writing it over here, and I will even close this books of accounts. So we have taken not a small question, but covering bonus fully, right shares fully, and a somewhat portion of dividend, and we have understood it in a form of XYZ Limited shares. Now let us understand concept of dividend as well as interim dividend. So as in previous question, we have done a base of it, dividend. Dividend which is received in 21-22 it belongs to always previous year, which is 2021. With this concept, let me take one more example. I have made investment in equity shares of ABC Limited. This is 1/4/21 to 31st March 22 books of accounts. This will be particulars. This will be number of shares. This will be revenue, income, cost, particulars, number of shares, revenue, income, and cost. Opening balance on 1/4/21, I was having opening balance of 5,000 shares at a cost of 50,000 rupees. On 1/5/2021, I purchased some shares at the rate of rupees 55. Sorry, it is 10 rupees, so let me make it 12 rupees. At the rate of rupees 1,20,000. These are actually purchased. On 4/6/2021, I have received some bonus. It was specifically told while issuing this bonus that whatever dividend will be received will not be received on this bonus shares. So I have received 6,000 rupees bonus at what cost? 0 rupees. Is it correct? Even on 10/6, I have received some right shares. I have purchased some right shares which were 4,000 at the rate of rupees say 30. At the rate of rupees 9. So it is 36,000. And I have sold some right to subscribe for shares of 2,000 shares by bank. Sold right. I have told you it is a revenue, income. It will be transferred to P&L account. And I have sold right of say 2,000 shares. So totally I got a right of 6,000 shares, out of which I purchased 4,000 shares at the rate of rupees 9, and remaining right I sold at 2 rupees. So I have received 4,000 rupees as revenue income. That's all. This is just I'm making base of dividend. Now on 1/12/2021, on 1/12/2021, company declares dividend at the rate of 20% on face value of rupees 10. What is the face value of company shares as rupees 10, and company declares dividend. Now try to understand, whatever is your holding period, even if your holding period is 1 day, you will be receiving dividend on this particular shares which you are holding on 1/12/2021. So on 1/12/2021, I am having 5,000 opening balance, 5,000 which was opening balance. Another 10,000 shares purchased on 1/5, 10,000 shares purchased on 1/5/2021. Another 6,000 shares as bonus. And another 4,000 shares are right. Please try to understand. Company says, while declaring this bonus and right, company says we will not be paying dividend on this shares. And they are even logical. Why? These shares are issued in 21-22. The dividend which the company is declaring, when the company is declaring 21-22, if the company is declaring in 21-22, received by shareholder in 21-22, the dividend is of 2021. This dividend is of 2021. So company is logical. If the dividend is of 2021, these shares were given to you free in 21-22. Why we should declare dividend? And it will be written in that bonus policy that no dividend will be declared on the shares. Next year it will be declared. On this 4,000 shares also, company has decided that they will not be giving dividend. So how much dividend I will be receiving? Number one, on this 5,000 shares, face value 10 into 20%. This will be, this is 50,000 into 20%. It's 10,000 rupees. And on this 10,000 shares, having a face value of 10, 20%, dividend is always paid on face value as an interest. And this will be 20,000 rupees. Now let us talk about this dividend. I was owner of this 5,000 shares in opening, that is 1/4/21. Means I holded these shares in previous year, that is 2021, at least as on the last day of previous year 2021. If I have purchased these shares in previous year and I was holding on the last day of this particular year, this dividend also belongs to 2021. It is received in 21-22, but it belongs to 2021. Is it all right? Try to understand. I am writing some sentences. I was holding the shares in 2021. Dividend is of 2021. It is received in 21-22, but dividend is of 2021. See, if I was holding something in 2021 and if I am receiving some income from it, it should be treated as a revenue income and should be transferred to profit and loss account. All right, as simple as this. Let us talk about this. And believe me, this will be somewhat weird. Was I holding this share in 2021? I was not. holding this shares in 2021. Sir, company has issued it in 21-22. No, you have purchased it from market. So company might have issued before 10 years. You have purchased it from some another person, but you were not holder of the shares in previous year, that is 2021. But the dividend is of, this dividend which was declared is of 2021. Then in technical language, this dividend is termed as pre-acquisition dividend. You will be very happy. Why? For the year for which the dividend is declared, you were not the owner of the shares, but still you are receiving this dividend. You are not holding the shares, but still you are receiving that profit from it, that is dividend from it. Then this is termed as pre-acquisition dividend. See the wordings. Pre-acquisition. The date on which I purchased is 1/5. This dividend is pre-acquisition. This dividend is before my acquisition happened. Pre-acquisition dividend is treated as capital income. As per AS 13, it should be reduced from cost. Now, if you understand this properly, it will be very easy to write it down in your books of accounts. 10,000 is the revenue income. I have received it, so by bank. What I need to do of this 20,000 rupees, it is pre-acquisition dividend. I want to reduce it from cost. Very simple. See, my shares are not going out. What if I want to increase the cost? I will write figures on debit side. What if I want to decrease the cost? I will write figures on credit side. So this 20,000 rupees pre-acquisition dividend is reducing the cost. I have written it in cost column, credit side, but I have not sold anything. So my number of shares will remain same, but my cost will decrease. Now onwards, whenever I want to find out cost of all the shares, 15, 6, 21, 25,000 shares, I will be doing total cost minus this 20,000. That will be cost of my 25,000 shares. That's correct. So what I have done, revenue income I have transferred to P&L account, so I am writing it in revenue column, and capital income will be reduced from cost because it is pre-acquisition dividend. I have written it in cost column, which is credit side. Is it all right? Let me balance it. On 31st March 2022, revenue will be transferred to P&L account. What all will be transferred? 4,000, that will be right shares sold. It is right sold, right? Not right shares sold. Right sold. And by P&L account, dividend. This will be revenue dividend, which is 10,000. So I will tally this column. How to tally number and cost column? Closing 31st March 21 by closing. How many shares I am holding? 15 plus 6, 21 plus 4, 25,000 shares. What will be cost of this 25,000 shares? Balancing figure. What is the balancing figure? 1,20,000 plus 50,000 on debit side plus 36,000 on debit side. 0 minus 20,000. Do you understand? This is reducing my cost. 1,86,000. See, this would have been 2,06,000 if 20,000 was not written over here. So this is 1,86,000 is cost of 25,000 shares. It would have been 2,06,000, but it is reduced by 20,000. So this 20,000 pre-acquisition dividend is reducing my cost. Sorry. Last point, as far as explanation is concerned, is interim dividend. So the year is 2021-22 and company wants to pay dividend for year 21-22 only. They don't want to pay off 2021. They don't want to pay off previous year. They have already say paid off previous year. Now they want that they are having huge profit, and so they want to give even dividend of current year. Then this current year dividend, see, if current year you are paying dividend of current year, it is given the name interim dividend. And if in current year you are receiving previous year dividend, then it is termed as normal dividend. But if in current year you are receiving current year's dividend, it is known as interim dividend. Is always the revenue will be transferred to profit and loss account. So this will go in revenue column. This is all as far as understanding of investment is concerned. In next lecture, we'll be starting questions of investment account. Let us solve some question of investment account. This is classwork question number 1, C2.1. Rishikesh furnishes the following details relating to his holdings in 8% debentures, which are held as a current asset. On 1st April, opening balance was so and so, 1st July, 1st October, 1st January, and 1st February. So practically they are given in sequence. Also, it is fixed interest bearing security that are debentures. Due dates of interest are 30th September and 31st March. So 30th September will come over here. 31st March will come over here. Rishikesh closes his books on 31st March. Brokerage is 1% to be paid on each transaction. Remember, for all the transactions, we'll have to calculate the brokerage. What to do with brokerage, that I'll be telling you. Show investment account as it would appear in his books. Assuming FIFO method, market value of 8% debentures as on 31st March is 99. This information will be taking into consideration at last. So, they are 8% debenture account, 8% debenture of P Limited. Record dates, you will be getting interest 2 times on 30th September and 31st March. Those are the 2 dates you are getting interest. So you will be getting on 30th September 4% and 31st March 4%. And this is in the books of R. Investment account. How we solve it? Number of debentures, interest, cost. On debit side, number of debentures, interest, and cost on credit side. We are starting with first information. Opening balance having face value of 1,20,000 rupees. So how many number of debentures are there? 1200 debentures, right? So opening balance 14, excuse me. There are 1200 debentures. The question is, should I calculate interest? The answer is always yes. For any information, I'll have to calculate interest. And what is the way of calculating it is last record date up to transaction date. So what was last record date for 1st April? It was 31st March. 31st March and 1st April, I'll not be calculating interest of 1 day, right? So I'm taking it as 0. Also, interest up till 31st March is calculated, and 1st April interest, I'll be getting it on next record date. and the cost of this debentures are 1,18,000. So opening balance is over. We have even calculated the interest, which comes to be 0 in this particular case. 1st July, we have purchased. So 17 to bank. We have purchased how many debentures? 100 debentures at the rate of rupees 98x interest. First, always calculate interest without thinking anything. Always calculate interest from last record date to transaction date. So what was last record date? 31st March. This is 1st July. So April, May, June, 3 months interest on 100 debentures having a face value of 100. Interest is always calculated on face value into 8% into April, May and June. 3 divided by 12 will be the answer for interest. It is 10,000 into 8% into 3 divided by 12. So interest is 200 rupees. Now I will be drawing a working note because that is a brokerage. The date is 17, purchase 100 debentures at the rate of rupees 98. It is rupees 9,800, which is my purchase price. Whether it is including interest or whether it is excluding interest, it is excluding interest. What is interest? 200 rupees, which will be settled separately. So I will be purchasing this 100 debentures, will be paying this 9,800 rupees towards cost of debentures, and I'll be paying this extra 200 rupees as an interest. Why? He was holding this debentures for 3 months. For 3 months, I'm giving him interest of 200 rupees. Now onwards, on record date, I'll be getting my full interest for full 6 months. So my purchase cost is 98, but there is a brokerage. Now try to concentrate. Brokerage is an expenditure when you purchase the debentures. Brokerage is expenditure even when you sell the debentures. So brokerage will increase the purchase price and brokerage will decrease the selling price. Because it is expenditure in any case, whether you purchase or sell, you will have to pay the brokerage. It will increase the purchase price and decrease the selling price. This is purchase price. So 1% brokerage is 98 and my purchase cost will be 9898. It will be 9898. This is transaction for 17. Now we are directly having record date, which is 30th September. On record date, neither there will be purchase of debentures, neither there will be sale of debentures. So number I will be putting dash. How much interest I will be getting? How many debentures I am having on 30th September? On 30th September, I am having 1300 debentures. Into 100, it is always paid on face value. Into 8% into 6 divided by 12. Or I can do into 4% directly. So it is 1300 into 100 face value into 4%, which is 5,200. Cost will be also 0 because there is no sale of debentures. This is on record date, I will be receiving the interest. Next transaction, 1st October. Sold 200 debentures X interest at the rate of rupees 100. So the date is 1st October. Sale of debentures means credit side. By bank. How many debentures I have sold? 200 debentures. Should I calculate interest? Always. In inner column, always calculate the interest and keep the interest as it is. on 200 debentures 100 rupees into 8% into what was last record date 30th September, which is current date 1st October. So I will not be calculating that one day interest. 0 divided by 12 will be 0 rupees. So it does not matter whether it is X or cum because it is zero interest. Now at what rate you are selling it? This is 110 sold 200 debentures at the rate of rupees 100, which is 20,000 rupees. Does this include interest, exclude interest? Does not matter because interest is zero. Minus brokerage. Now brokerage is my expenditure. It will reduce my selling price by 200 rupees. So 19,800 will be selling price. How I record sale? I record sale in cost column. It is 19,800, but it is wrong to record selling price in cost column. So what I do, on credit side I write down selling price and on debit side I write down profit. Same in trading account. In trading account everything is written at cost except sales, which is written at selling price. So you get GP on debit side. Here also I'll be finding out profit on sale of this debentures. Now what will be profit on sale of this debentures? For that I will have to find out cost of this 200 debentures. Now the question comes, where I have sold, from where I have sold this 200 debentures from? From opening balance, or I have sold 100 debentures this and 100 from opening balance. Here I'll have to see which method I am following. I am following FIFO method, first in first out. Which was first in my business? This opening balance. So the debentures are sold from this 1200 debentures. 100 debentures are sold. So easy cross multiplication. If 200 debentures, 1200 debentures are costing 1,18,000 rupees, then 200 debentures will be costing how much? It is 1,18,000 rupees divided by 1200 multiplied by, this comes cost of debentures are 98.33 multiplied by 200, which is 19,667. 19,667. So the cost is 19,667 and the selling price is 19,800. So profit will be 19,800 minus 19,667. It is 133 rupees. Which is profit? I will be writing down over here 133 rupees on 110 to P&L account profit. Now watch closely. What you have written on credit side is selling price. What you have written on debit side is profit. Selling price minus profit will be cost. In this case 19,800 minus 133 is net credit written, and what is 19,667 is nothing but cost. All right. So it is cost of this 200 debentures. So it is written perfectly in cost column. This was a sale transaction 110. 1st January, debit side because I am purchasing it 11 to bank, purchase 50 debentures. Purchase 50 debentures. Should I calculate interest? The answer is always yes. From last record date to transaction date, they are 50 debentures. 100 is face value into 8% into what was last record date was 30th September. October, November, December. This is 1st January, so I will not be calculating January. So 3 divided by 12. Interest will be 5,000 rupees into 8% into 3 divided by 12, which is 100 rupees. Let us go to working note of this purchase. So 1st January. 1st January purchased 50 debentures. at the rate of rupees 98. At the rate of rupees 98. So what is purchase price is 50 into 98, 4,900 rupees. Now, whether it is cum interest or ex interest, it is cum interest. Means this selling price is including interest. The selling price is including interest. So what is my selling price? 4,900. What is my interest is 100 rupees. So 4,900 is cost of debentures plus interest. Interest is included in this particular price. So I will reduce interest from this, minus interest 100 rupees. So ultimately my cost of debentures is only 4,800 plus brokerage of 48, 1%. So 4848 will be my cost of this 15 debentures, and 100 rupees interest I will be paying in inclusive of this 4,900 rupees. 100 rupees interest already I have done, and 4848 I will be writing it over here. Sir, actually you are paying 4848. No, actually you are paying 4948. 48 rupees for brokerage, 4,800 rupees for debentures, and 100 rupees for interest. So you will be paying this also, you will be paying this also. This is just an informative column. It is interest account debit to bank 100 rupees and debentures account debit to bank 4848 rupees. So this is 1st January. We can go to 1st February. Sold 200 debentures. Sold means on credit side. 1st February by bank, in bracket you can write down sale. Sold 200 debentures. Should I calculate interest? The answer is yes. Interest will always be calculated from last record date up to transaction date. So 200 debentures into 100 into 8% into what was last record date was 30th September, October, November, December, January. So there are 4 months, into 4 divided by 12. So it is 20,000 into 8% into 4 divided by 12, which is 533 rupees. 533.33. Now, what is the purchase price? Is rupees 99 x interest. 1st February purchased 200 debentures at the rate of rupees 99, and it is excluding interest. So this is only cost of debentures. Interest of rupees 533 will be received separately. It will not be received along with the selling price. It will be received separately. $19,800. No need to deduct interest because interest is not included in this figure. But I will have to add 2%, 1% brokerage. It is 198 rupees. So 19,800 plus 198. It is 19,998. Sorry, it is sold 200 debentures, right? So at the time of selling, brokerage is deducted minus brokerage. This is not purchase, this is sale. 1st February is selling of 200 debentures. So in this 19,800, again interest is not included. So 19,800 is exclusive of this interest of 533. This is my selling price, and 1% brokerage of 198 should be deducted. 198 brokerage will be deducted. So my net selling price would be 19,800 minus 198, 19,602. is my selling price. Now I'll have to find out cost price. Cost of this 200 debentures. Now this 200 debentures will be again sold from this opening balance. Why? Out of 1200, 200 debentures are sold. So still 1000 debentures are pending. So I'll be finding out cost of this 200 debentures. See, in previous point also we have found out cost of 200 debentures. Now it will remain same because the cross multiplication will remain same. 1200 debentures is costing 1,18,000. What 200 debentures will be costing? So my cost will remain same, which is 19,667. Cost is 19,667. Selling price is 19,602. There is the loss. 19,602 minus 19,667 is a 65 rupees loss. The 65 rupees loss, how I will record in my investment account? Please try to concentrate. I want to record cost, right? So I want to record this. Instead, I'll be writing this on credit side, even this on credit side. So net I will be writing 19,667 on credit side. How? My selling price will be 19,602. Also, the 65 rupees I'll be writing it over here. It is by P&L account. That is my loss. So total what is written is 19,667 on credit side. If you total this, it is 19,667 and it will be exactly cost. So only we are saying it is cost of cost column where we need to write down only cost. But how we adjust it? Selling price, loss credit side, profit debit side. It was X interest and we have completed this. Last 31st March will be record date. 31st March by bank. First, how many debentures I am holding? I was having 12,1350, out of which I have sold 400. So I am having 950. 800 from this because 400 I have sold, 900 and 950. Into 100 into 4%. You can directly do, or you can do 8% into 6 divided by 12. That is one and the same. 950 into 100 into 4%. It is 3,800 interest received on record date. Nothing else is pending. I can close my books of accounts. 31st March by closing. How many debentures are there? 950. How much interest? I should always calculate it, but last record date was 31st March. Today is also 31st March. So the interest will be 0. Otherwise, I would have calculated it. Closing balance. Closing balance, I'll be just finding out balancing figure. 1,18,000 plus 9898 plus 133. Plus 4848 minus 19,800 minus 19,602 minus 65 will be 93,412. Does this tally? Does this tally? Interest column will be transferred to profit and loss account. So what is the interest? 5,200 credit plus 533 credit plus 3,800. This is interest received during the year minus 200 minus 100, which is 9,233. 31st March will be transferred on credit side of P&L. 9,233 is the balancing figure. This will be transferred to P&L. as it is the first question, let us logically understand all the figures. First cost column, this is cost of 1200 debentures, this is cost of 100 debentures, this is cost of 50 debentures. This 200, as we are purchasing this 100 debentures and the seller has holded this debentures for 3 months, we will be paying him 3 months interest separately at 200 rupees. Same over here, I will be paying 3 months interest of rupees 100 separately to my seller. I am a purchaser, I will be paying it to seller. Interest received on record date. See, when we are purchaser, we were paying. When we are seller, we will be receiving this 4 months interest separately. Separate from cost of debentures. So cost of for debentures, I am receiving 19,602 rupees and 533 rupees I am receiving as interest. Because now on record date, I will not be receiving interest on this 200 debentures even if I hold it this for 4 months. This is interest received on record date. 9233 is interest earned during the year. 9233 is interest earned during the year. This is selling price of this 200 debentures and this is profit of this 200 debentures. Selling price minus profit, I am ultimately recording cost. Selling price of this 200 debentures and loss of this 200 debentures. Ultimately, this is cost of this 200 debentures. This is cost of remaining 950 debentures. These are remaining debentures, the sold debentures, these all are purchased debentures. Opening plus purchased debentures. Now, as this is the first question, let me do this exercise. This is not required in examination. I am just doing it for logical purpose so that you actually understand what you are doing. See, up till now what we have done is we have calculated interest from last record date to transaction date. Is it all right? What is the interest earned during the year 9233? Let me do it on the first page. So what is interest earned during the year 9233? Is it all right? Now, what should be transferred to P&L account? We have learned it at our lower standard that whatever we earn. So if I am holding the debentures for 5 months, I should record the interest of 5 months. If I am holding the debentures for 10 months, I should record it for 10 months. If I am holding the debentures for 1 month, I should record in P&L account debentures of interest of 1 month. So interest should always be calculated for my holding period and that only can be transferred to P&L account. Let me logically find out the figure. See, this 1200 debentures, I am not holding it for 12 months. Huh? This 200 I am selling it and 200 again I am selling it. So let me divide it into 3 parts. 800 debentures, 200 debentures and 200 debentures. 800 debentures I am holding it for 12 months which are never sold. 200 debentures. First I am selling it on 1st October. So April, May, June, July, August, September I am holding it. So I am holding it for 6 months. This 200 debentures I am selling it in 1st February. So February and March I am not holding. All other 10 months I am holding. Remaining which debentures are there? 100 and 150 which I am holding it not for full year. 100 and 50. 100 I have purchased when? On 1st July. So I am holding it for July, August, September, October, November, December, January, February, March. So I am holding it for 9 months. 50 debentures when I have purchased. First January. So I am holding it for January, February and March. That is for 3 months. So technically what should be transferred to P&L account is interest on 800 debentures for 12 months, interest on 200 debentures for 6 months, interest on another 200 debentures for 10 months, interest for 100 debentures for 9 months and interest for 50 debentures for 3 months. Let me calculate the interest. 800 into 100, that is face value, into 8% into 12 divided by 12. 200 into 100 into 8% into 6 divided by 200 into 200 into 100, that is 20,000 into 8% into 10 divided by 12. For this it is 100 into 100 into 8% into 9 divided by 12, and for this it is 50 into 100 into 8% into 3 divided by 12. So this will be 80,000 into 8% into 1, that is 6,400. This is 20,000 into 8% into 6 divided by 12, that is 800. This is 20,000 into 8% into 10 divided by 12, which is 1,333. This is 10,000 into 8% into 9 divided by 12, which is 600. This is 5,000 into 8% into 3 divided by 12, which is 100. Total this out. This should be interest on during the year, which is 6,400 plus 800 plus 1,333 plus 600 plus 100, which is 9,233. 9,233. So rather than calculating this, our investment account will automatically calculate interest earned during the year. Holding period will be automatically calculated. All right. So this is nothing but 8% debentures account. One more, 93,412. This we have taken as balancing figure. This is not required in examination like this. This is not required in examination. This is just for proving that investment account is extremely logical. I have done it. Let me also prove 93,412 is cost of 950 debentures. Again, this is not required in examination. From opening, I am having 800 debentures. Another 100 debentures I have purchased and another 50 debentures I have purchased. What is cost of this 100 debentures? Is 9898. What is cost of this 50 debentures? 4848. What is cost of this 800 debentures? If 1200 debentures is costing 1,18,000 rupees, then 800 debentures will be costing how much? This will be my answer. 800 into 1,18,000 divided by 1200, which is 78667. Will be cost of this 800 debentures. These are total 950 debentures and this should be cost of 950 debentures. 78667 plus 9898 plus 4848, which is 93,413. Just take it as 6. This is 93,413. Are you getting it? So logically closing balance we have found out by difference figure, but ultimately it is cost of this 950 debentures. So even if we logically find out cost of this 950 debentures, it is 93,412. In examination, you can write down balancing figure. Stop. Now, at what rate our closing stock is valued at, or closing debentures is valued at? It is 93,412 divided by 950, which is 98.32 rupees. This is 98.32 rupees per debentures. What is market price of debentures? They say is 99, and this investment are shown at current asset. Again, we are learning one point of AS 13. If the investment are shown at current asset, then it will be valued at cost or market price, whichever is less in our balance sheet. Cost is, we have found out cost 98.32 is my cost and 99 is my market price. So it should be valued at 98.32. We have valued it at 98.32, so there is no problem. We can go ahead. If it is current investment, it should be valued like closing stock, normal closing stock, cost or market price, whichever is less. Here also I am valuing it at cost or market price, whichever is less. In this case, it is cost. This was question number 2.1. 2.2 is similar type of question. The following information is presented by Krishna relating to his holdings in 9% central government bonds. Now they are fixed interest bearing securities. It will be as good as debentures account during a year. Opening balance is 1200. I am assuming the face, no, it is given. Face value is 100. So they are 1200 bonds at a cost of 1,18,000. This is opening balance. 1st March purchased 200 units ex interest. 1st July sold 500 units ex interest. 1st October, 1st November. Interest dates are 30th September and 31st March. These are record dates. Krishna closes his books on every 31st December. Show the investment account as it would appear in his books. We are going to prepare same type of debentures accounts in the books of Krishna. It will be 9% central government bond. Record date is 30th September and 31st. Okay, he closes his books of accounts on 31st December. So closing date is 31/12. We can go ahead. Number of bonds, interest, cost. On credit side also number of bonds, interest. Opening balance will be 1st January. Opening balance 1200 units of bonds, cost 1,18,000. The question arises, should I calculate interest? The answer is always yes. There is no option in it. We should always calculate interest. 1200 into 100 into 9% into what was last record date was 30th September last year. This is 1st January. So October, November and December, 3 months divided by 12. Last record date to transaction date. Interest will be 1200 into 100 into 9% into 3 divided by 12, which is 2700. What is this? Interest due but not received of previous year. We'll come again to this. Next is 1st March. We have purchased. So 1st March to bank. We have purchased 200 units. Should I calculate interest? The answer is always yes. 200 into 100 into 9%, and 30th September to 1st March is 5 months, into 5 divided by, it is 20,000 into 9% into 5 divided by 12. It is 750 rupees. And they are purchased X interest at the rate of 98. Please understand, if it is X interest and if there is no brokerage, there is no use of working note. So 200 into 98 is my purchase price. 19,600 does not include interest. So interest will be paid separately of how much rupees? The 750 rupees. And 19,600 will be directly written over here. I am not drawing a working note because it is easy. There is no brokerage even. 1st July. Before that, 31st March. I will be getting my record date. So 31st March by bank. I will be receiving interest on 1400 bonds into 100 into 4.5%. 6 monthly I will be getting 4.5%. So it is 1400 into 100 into 4.5%. It is 6,300 interest received on record date on 1400 bonds. Next, 1st July. Sold 500 units. Sold is credit side. 1st July by bank 500 units. Should I calculate interest? The answer is always yes. 500 into 100 into 9% into last record date now was 31st March. April, May and June. 1st July, so I will not be calculating July, into 3 divided by 12. It will be 50,000 into 9% into 3 divided by 12, which is 1125. Will be interest paid. In sale, I'll always have to draw a working note. 1st July, sold 500 bonds at the rate of rupees 100. So it is 50,000 rupees. Selling price. Is this inclusive of this interest of 1125 or excluding? Excluding interest. It is written, it is X interest. So this figure is excluding interest. So I need not deduct the interest. This is just selling price of debentures. There is no interest received in this particular figure. There is no brokerage. So brokerage is not to be calculated. Out of original holding. So they are saying out of opening balance. So they are indirectly saying you need to follow FIFO method. So I will be doing same thing. I will be finding out cost price of this 500 debentures, 500 bonds. What will be cost of this 500 bonds? Debenture cost, just a cross multiplication. If 1200 debentures are costing 1,18,000, then 500 bonds will be costing how much? If 1200 bonds are costing 1,80,000, then 500 into 1,18,000 divided by 1200, which is 49,167. We do it again. 500 into 1,18,000 divided by 1200, which is 49,167. Is my cost. Selling price minus cost will be my profit, which is 50,000 minus 49,167. 833 rupees. Profit or loss is my. See the art of writing it. This I'll be writing it on credit side. This I'll be writing it on debit side. And so net effect I'll be giving is of cost because I'm writing it in cost column. So 50,000 and 833. 50,000 over here and 833 over here. On 172 profit and loss. Ultimately I have written cost. 1st October, again I have purchased 110, yet record date, yes, now I am getting a record date, right? 30th September, now will come and the transaction is of 1st October. So 30th September, buy bank. How many bonds I am holding? 1400 minus 500, so 900. Why 1400? 1200 plus 200 minus 500, that is 900. So 900 into 100 into 4.5%. 900 into 100 into 4.5%, which is 4050. Again interest received. Sorry, yes, interest received on bonds. Going to next transaction is 1st October. 1st October purchased 150 units. So 110 to bank 150 units and you have purchased it at 98. Believe me, come interest and X interest will not be there. You should always calculate interest, yes. Last record date was 30th September. Today is 1st October. So you just need to calculate 1 day interest. 1 day interest I'll not be calculating. I'll be keeping it as 0. So it does not matter whether I purchase cum interest or X interest because interest is 0. So 150 into 98 I can directly write down without any working note. 14,700. 1st November, sold 300 units. 111. Buy bank, sale 300 units. Should I calculate interest? The answer is always yes. So it will be 300 into 100 into 9% into last record date was 30th September. October, only 1 month. 1 divided by 12 will be my interest. So it will be 30,000 into 9% into 1 divided by 12, which is 225 will be my interest. Let me now go to working note. 111 sold 300. 111 sold 300 bonds at the rate of rupees 99. So 300 into 99 will be 29,700. Selling price. It is cum interest or X interest? X interest. So interest will be receiving separately. This selling price does not include the interest. So I will not have to deduct the interest portion. But I'll have to find out cost of this 300 debentures. Cost of 300 bonds, not debentures, bonds. So 500 was sold from this 1200. So there are still 700 bonds in it, right? 1200 was opening, out of which 500 are sold. So still 700 are there. So this 300 will be sold from that 700 only. Also they have written original. Yes. So it is FIFO method, right? So this will be the cross multiplication. If 1200 debentures are costing 1,18,000, then 300 debentures or bonds are costing how much? Will be 300 into 1,18,000 divided by 1200. It is 29,500. Again, there is a profit of 200 rupees. What is the art of writing it? This will be written on credit side, this will be written on debit side, and ultimately what I'll be recording is this 29,700 and 200 will be on debit side. To P&L account will be transferred on 1. All the transactions are over. I will be finding out closing balance 31st March. Sorry, 31/12 by closing. How many debentures now I am holding? 1200, out of which 800 I have sold. So here it is 400, 200, 600, 750. This will be closed. Should I calculate interest? Is it 750? 14, 1550 minus 800. Yes, 750. Should I calculate interest? The answer is always yes. 750 into 100 into 9% into, the technique remains same. Last record date 30th September, current date 31/12, so 3 months. It is 75,000 into 9% into 3 divided by 12, which is 1687.5. Once again, 70, 50 into 100 into 9% into 3 divided by 12. It is 1687.5. 1688 will be my interest. What is this interest? 1688. Okay, let us solve the question, and then at last we'll be I'll be explaining you all the interest types, right? Closing balance. First, I need to find out 1,18,000 plus 19,600 plus 833 plus 14,700 plus 200 minus 50,000 minus 29,700. It is 73,633. And on 31/12, the balance interest will be transferred to P&L account. What will be balance interest? 6,300 plus 1125 plus 4050 plus 225 plus 1688 minus 2,700 minus 750. It is 9938. What is 2,700? It is, let us first understand 1688. 1688 is interest for October, November and December, as these 3 months have already passed. But we are going to receive interest in next year. These have already gone, October, November and December. I was holding this 750 debentures for this 3 months, but I have not received it. So it is interest due but not received closing. This is interest due not received opening. It was already recorded in last year, so no need to record it in current year, so I have debited. This is interest paid separately when you are purchasing the bonds. This is interest received on record date. Interest received when you were selling the debentures. You were holding it for 3 months. You know it, so you took it from your purchaser that give me 1125 rupees for holding period of 3 months. This is interest received on record date. Again, this is interest received from purchaser. What is 9938? Interest earned during the year for my holding period, and in previous question we have also logically understood it. This is closing cost of 750 debentures. Okay, they have not even given the market price, so this will be end of question number 2. Question number C 2.3. A Limited purchased on 1st April 8% convertible debentures in C Limited. What are convertible debentures? On one fine day, it can be converted into equity shares of a face value of rupees 2 lakhs at the rate of 108. It looks like the face value per debenture will be 100 rupees. So these are 2000 debentures at 108. On 1st July, A Limited purchased another 1000 debentures of rupees 1 lakh, face value is 1000 debentures at the rate of 112 cum interest. On 1st October, 80,000 debentures were sold at 105. On 1st December, C Limited, this is important in this question. C Limited gave option of conversion of 8% convertible debentures into equity shares of rupees 10 each. A Limited received 5,000 equity shares in C Limited in conversion of 25% of debentures held on that date. The market price of debentures and equity shares in C Limited at the end of the year will be 110 and 15 respectively. Interest is payable each year on 31st March and 30th September. Accounting year of A Limited is calendar year. So we'll be ending the books of accounts on 31st December. Prepare investment account in books on average cost basis. So two new points, conversion as well as average cost basis. Let us first prepare our investment account. It is in the books of A Limited. And they are debentures, 8% debentures of C Limited. 8% debentures of C Limited. And it is having record date of 31st March and 30th September. Anything else? No. And the year end is 31/12. There is number of debentures, interest, cost. Number of debentures, interest, cost. So directly from 1st April, it is not opening balance, it is purchase. And they are 2000 debentures. What will be interest? Last record date was 31st March. That is 1st April. Will not be calculating one day interest. Interest will be 0. Cost. They have given at the rate of 108. I need not draw any working note. 2000 into 108, 2,16,000. See, if you will note, they have not given X interest or cum interest. That is good, because it does not make any difference whether it is X interest, cum interest, because interest is 0. 1st July, A Limited purchased another 1000 debentures. 17 to bank, 1000 debentures. Should I calculate interest? Yes, always yes. 1000 debentures into 100 into 8% into what was last record date? 31st March, April, May, June. So into 3 divided by 12. This will be interest, which will be 1 lakh, multiplied by 8%, multiplied by 3 divided by 12, which is 2000 rupees. And I'll have to prepare a working note for it because it is cum interest. 1000 debentures, 1000 debentures, this is purchase, were purchased at the rate of 112. So this is 1,12,000. And they are saying this is cum interest. So it is debenture cost plus interest. I will have to reduce interest from it. 2000 rupees is interest. We have already calculated the interest. So 1,10,000 is nothing but cost of debentures. So you have paid 1,12,000, but it is inclusive of interest of 2000. So for debentures, you have paid only 1,10,000. 1,10,000. 17. Next is 1st October. Before that, we'll be getting 30th September, which is our record date. By bank, I will be getting interest on 3,000 debentures into 100 into 4%. That is 12,000 rupees. This is interest received on record date. 1st October, 800 debentures were sold at the rate of 105. Again, it is not given whether it is X interest, cum interest. Interesting, let us see it. First 10 by bank sale. They are 800 debentures. Interest always calculated 30th September, 1st October. One day I'll not be calculating it, it is 0. So it is not given whether it is X interest or cum interest because it does not make any difference. They are sold at the rate of rupees 105. Sale, always you'll have to prepare working note. 110, 800 debentures sold at the rate of 105. 800 into 105 is 84,000. What is cost of this 800 debentures? Please try to understand. We don't have to follow FIFO method. We will have to follow average cost method because they have given you find out average cost method. How to find out average cost method? Very simple. If the cost of 3,000 debentures is 3,26,000, this is total cost. Alright. So if cost of 3,000 debentures is a total of this 3,26,000, then what is cost of 800 debentures? Now it is average cost because neither I am taking cost of this 2,000 debentures nor this cost of 1,000 debentures. I am taking total cost of this 3,000 debentures, so it becomes weighted average. What will be answer? It is 3,26,000 multiplied by 800 divided by 3,000, which is 86,933. 86,933. My loss will be 2,933, which is my loss. I will be writing it down. Credit side, ultimately what I will be recording is credit of 86,933. So 84,000 selling price and 2,933 as 110 will be transferred to debit side of P&L account. 2,933. Now going to the main point why we are doing this question. 1st December. No record date before that? Yes. C Limited gives option for conversion of 8% convertible debentures into equity shares of 10 each. A Limited receives 5,000 equity shares in conversion of 25% debentures held on that date. So you are converting 25 debentures on 1st December. You are converting your 25% of your holding. What is 25? What is your holding? Your holding is 3,000 minus 800. 800 you have already sold. So your holding is 2,200. 2,200. So how much you are selling? 2,200 into 25%, which is 550. Debentures. This you are selling. 550 debentures. This you are selling? No. Practically, you are giving this 550 debentures in exchange of equity shares. How many equity shares you are getting? 5,000 equity shares. Sir, it is good. We are giving something which is 550 and we are getting 5000. Please understand, this is not important. I might be giving you 5 pens and I might be getting 1 diamond, but 1 diamond might be more valuable. So it is not important how much units you are getting. This is having face value of 100. This is having face value of 10. Equity shares are having face value of 10, right? So the market price is important, but they have even given the market price 110 and 15 rupees. Is it all right? So what you are exchanging is into 110 and this will be multiplied by 15 and probably you will be getting the same answer. But right now concentrate, this is having a market value of 5000 into 15 rupees, which is 75,000. Is it all right? Can I say this 550 debentures are going out and this is coming in, equity shares are coming in? We are right now in accounts of debentures. In debentures, the date is the 1st December. By I am not receiving money, I am receiving equity shares. So by equity shares, how many debentures are going out? This is not equity share account, this is debentures account. How many debentures are going out is 550. Is it all right? What I should write down in cost column? Cost. But first, let us calculate interest. Should I calculate interest? The answer is always yes. 550 into 100 into 8% into September, October, November, December is so 2 divided by, it is 550 into 100 into 8% into 2 divided by 12, which is 733. Will I be receiving this 2 months interest? Yes. Try to concentrate. This 550 debentures are now cancelled and converted into equity shares. But this debentures I have holded it for 2 months. So company will first give me interest of this 2 months and then they will be converting it into equity shares. Sir, the company gives interest only on record date. Yes. But in the circumstances where it is cancelling its debentures, it will have to pay its outstanding interest. So 733 will be received. Now, in cost column, I should write down cost of debentures, but we normally write down selling price minus profit. Now try to concentrate what is the selling price. I have sold this debentures. I am using the word sold in exchange of equity shares which are worth rupees 75,000. So my selling price of this debenture is 75,000. What is cost of 550 debentures? Now it is simple because we know how to find out cost of this 550 debentures. If cost of 3000 debentures is 3,26,000, same cross multiplication, 3,26,000. Then what is the cost of this 550 debentures? It will be 550 into 3,26,000 divided by 3,000, which is 59,767. 59,760. So what will be my profit? It is 75,000 minus 59,767. 15,230 is my profit. So what is normally what I write down in my investment account? 75,000 over here and 15,233 over here will be transferred where? To P&L account. But please understand, in this case I will not be doing it. See, if I write down 15,233 over here, this is my P&L account and it will be transferred by profit on sale of investment 15,233. Have you actually earned this profit? No. This is unrealized profit. Try to concentrate. I was having one Reliance shares of 2000 rupees. Today, the market price of that Reliance shares is 2500 rupees. I am not selling it, then it is not my realized profit. It is unrealized profit. These debentures are not sold in the market. The debentures are converted into equity shares. So say this is my box. First there was debentures in this. Now there are equity shares in this. Where there is a realized profit. Nothing is realized. Everything is still in my box. Just the debentures is converted into equity shares. So this profit cannot be recognized in P&L account. So this is not a good way of writing it. What I'll be writing it is directly cost. And what is cost of this debentures is 59,767. I will not be transferring anything to P&L account. I am writing it on credit side because 550 debentures having cost of 59,767 is going out of my books of accounts. Going out, I am writing it on credit side. This is conversion of equity shares. Now, we are going to 31st December. Yes, which is my year end. 112, 31st December. I'm not having any other transaction, right? The market price of debentures and equity shares are 110 and 15. Interest is payable. Yes, there are no other transaction. 3112 by closing. How many debentures now you are having? 3000 minus 2200 minus 550. It is 1650 debentures. Should I calculate interest? Yes, I was holding it for October, November, December. I have not received interest. Interest due but not received. Will be this figure. It is 1650 into 100 into 8% into October, November, December, 3 divided by 12. Last record date to transaction date. It is 3,300. Interest I will be receiving. This will be closing balance. What will be closing balance? 2,16,000 plus 1,10,000 minus 84,000 minus 2,933 minus 59,767, which is 179,300. Interest on 3112 will be transferred to P&L, which is 10,000. Calculate it. 12,000 plus 733 plus 3,300 minus 2,000, which is 14,033 rupees. Will be transferred to profit and loss. All right. On closing date, how much debentures I am having? 1650 at a cost of 179,300. So 179,300 divided by 1650, it is at a cost of 108.66. This is cost. What is market price? They have given market price as 110. So it should be valued at cost or market price, whichever is less, which is cost, and we have valued it at cost. Let us go to equity shares. How many equity shares I am holding? 5,000 now, because it was converted. What was cost of purchasing this equity shares is 108.66. What is the market price? Not 108.66. What is the market price? Is 50. See, 5,000 into 50. 75,000 was market price of this share. What was cost of this share? What cost we have foregone? 59,767. This is cost of equity shares. Cost or market price, whichever is lower. So equity shares will be also valued at rupees 59,767 and debentures will be valued at rupees 1,79,300. This is C 2.3. Next question is 2.4. Now we are moving towards equity shares. On 1st April, Hassan has 20,000 equity shares of Vayu Limited at a book value of 20 per share. So he has purchased it at 20. So his cost is 20, which is having face value of 10. On 10th June, he purchased another 5,000 shares in Vayu Limited 15 per share. On 1st August, Vayu Limited issued 1 bonus shares for every 5 shares held. On 31st August, the directors of Vayu Limited announced the right issue, which entitled the shareholders to subscribe shares for every 6 shares held at the rate of rupees 15 per share. The shareholders can transfer the right or part in full. Hassan sold 1/4 of his right shares holding to Harsh for consideration of rupees 3 per share and subscribed the rest on 31st October. Prepare investment in the books of Hassan Limited as on 31st October. In the books of Hassan Limited, and they are equity shares of Vayu Limited. I draw number of equity shares, revenue account. You may prepare, you may not prepare this, but anything which is transferred to P&L account, I'll be writing it in revenue account. Cost, number, revenue account, and cost on credit side. Here there is no record date. They are equity shares. So our concept of always calculating interest will go away. So this type of questions are somewhat short or can be done in a short period of time. Let us start. On 1st April, he is having opening balance of 20,000 equity shares. No interest is to be calculated. Cost is the 20 per share. So 20,000 into 20 will be 4 lakhs. On 10th June, he purchased another 5,000 shares. On 10th June, to bank purchased another 5,000 shares at the rate of rupees 50. So 75,000. On 1st August, Vayu Limited issued bonus. So 1/8 to bonus. See, bonus is not option. You will be directly getting it at free of cost, right? How much you are getting? 5 shares. 1 bonus shares for every 5 shares held. You will be getting 1 if you are holding 5. You are holding 25,000. So how many you are getting will be 5,000 shares as bonus. So you will be getting 5,000 shares as bonus free of cost. On 31st August, let me draw working note here itself. 31st August, the directors of Vayu Limited announced a right issue which entitles the shareholders to subscribe for 2 shares for every 6 shares held. So if you are holding 2, holding 6, you will be getting 2. How much now total you are holding? 30,000. How much you will be getting? 10,000. Please understand this, shares you will not be getting free of cost. Then sir, what you will be getting? You will be getting right to purchase. 10,000 shares at the rate of rupees 15. It is not free of cost. It is just a right given to existing shareholders to purchase this particular shares. The shareholders can transfer the right or in full. So you have purchased 10,000 shares? No. From company you have received right to purchase this 10,000 shares. Hassan sold 1/4 of his right and subscribed the rest of the shares. So 1/4 he sold right and 3/4 he purchased. 3/4 is 7,500 shares. He purchased at the rate of rupees 15. It is 1,12,500. This I will be recording it in my investment account. 7,500 shares purchased on 31/8 to bank. I will not be writing right shares. They are not free of cost. I can write down in bracket they are right shares at a cost of 1,12,000. Sir, what about remaining right of 2,500 shares? I am not purchasing the shares once again. I am just selling right to purchase the share to someone else at the rate of rupees 3. I will be getting 7,500 rupees, which as per AS 13 is a revenue income and should be transferred to P&L account. So in revenue column, I will be writing down by bank 7,500 rupees, which will be ultimately transferred to P&L account. So my this column will tell. There is no other point. You can just prepare closing. You will be having 37,500 shares. No outstanding, nothing interest because there are no record dates. This will be 4 lakh plus 75,000 plus 1,12,500. 5,87,500. And your books of accounts will. This was question number 2.4. Next is 2.5. Chandru purchased 500 equity shares of 100 in Vamana Limited for rupees 62,500 inclusive of brokerage and stamp duty. Some year later, the company resolved to capitalize its profit to issue the holders of equity shares 1 equity shares for every shares held by them. So 1:1. Prior to capitalization, the shares were so and so. After capitalization, the shares were 92.50. Chandru sold the bonus and received 90 per share. Prepare investment account in the books of Chandru on average cost basis. There will be only one good point. Otherwise, everything is easy. In the books of Chandru, they are shares of V Limited. Number of shares, revenue account, cost. Number of shares, revenue account. Chandru purchased 500 equity shares. Face value is 100 at 62,500. No interest problem because they are equity shares. Some years later, company issued a bonus in the ratio of 1 equity shares for every share held, 1:1. You were holding 500, you will be getting more 500. 2 bonus. What is cost of bonus is always 0. Prior and after share price is given, we are not concerned with it. We are getting bonus shares free of cost. Chandru sold the bonus shares and received 90 per share. So how many shares we were getting in bonus? 500. He sold it at 90. So he received 45,000 rupees as selling price. What is the cost of this 500 shares? Now, it is written they sold bonus shares, but still I will not be taking cost as zero. Try to understand. If your 500 shares are costing 62,500, and now because you were holding this 500 shares, you have got this 500 shares, then cost of 1000 shares will be 62,500. Even if it is written that only these are sold, we will be finding out average cost only. And what is the average cost? If 1000 shares are costing 62,500, then 500 shares will be costing how much? This will be costing of this 500 shares. It is 62,500 divided by 2, 31,250. This will be my profit. 45,000 minus 31,250. It is 13,750 is my profit. How I will be writing it in my books of accounts? This on credit side, this on debit side. That remains same as we were doing in debentures. So 45,000 is selling price by bank, in bracket sale, 500 shares. Selling price is 45,000. On debit side, I will be writing P&L of 13,750 will be transferred to P&L account credit side, cost account debit side, so P&L account credit side. I will be closing my books of accounts. Closing, I will be having 500 debentures of half of the value, right? Half of the value is sold, so half of the value is 31,250. This will automatically close. This will. Revenue account is not affected, so will not close revenue account. Easy question. C 2.5. Sixth one, again similar type of question, easy question. On 1st May, Mishra purchased 800 equity shares of rupees 10 each in Philco at 50 each from a broker who charged 5%. He incurred 20 paisa per rupees 100 as a cost of share transfer. On 31st October, bonus was declared in the ratio of 1:4. The shares were quoted at 110 and rupees 60 per before and after of bonus respectively. On 30th November, Mishra sold the bonus shares to a broker who charged 5%. Prepare investment account in the books of Mr. Mishra as on 31st December. In the books of Mishra, F Limited shares. In the books of F Limited shares. There are no record dates, so number, revenue, cost, number, revenue, cost of the share. On 1st May, he purchased 800 equity shares. Face value is 10 per share at the rate of rupees 50. So I'll draw a working note. 800 shares into 50 is 40,000 rupees. Who charge a 5% brokerage is 2,000 rupees. It is 42,000. And there is another share transfer fee. Cost of share transfer stamps. Now, share transfer fees is always levied on cost price. It is not levied on brokerage. So they say 20 paisa, that is 20 paisa for 100 rupees. If my cost is 40,000 rupees, it will be 20%, right? Which will be 8,000. So share transfer fees is 8,000. You can even do cross multiplication. Total cost is 50,000 rupees. All right. So cost is 50,000 rupees. Bonus was declared in the ratio of 1:4. Now understand, if nothing is given, it means if you are having 4, you will be getting 1. Alright. Whatever is given, 4:1, 1:4, it does not matter. It means if you are having 4, you will be getting 1. You are having 800. You are having 800 shares. You will be getting 200 shares. Free of cost because it is bonus. 200 shares to bonus. And it is 3110. The shares were quoted at 110 and 60. See, after declaring bonus, ultimately the share price decreases because there are now more number of shares with same amount of profits. Before and after record date. On 30th November, Mr. Mishra sold the bonus shares to a broker who charged 5%. Now, he sold bonus shares. So, how many shares are sold? 200 shares are sold. I have told you in previous question, we always take average cost. But my question is, what is the selling price? The selling price will be taken as this. Because after bonus, what was the selling price? 60. And after bonus, he is immediately selling the shares. So 60, this is 12,000 rupees. Minus brokerage. Brokerage is deduction from sale of 5%. That is 600 rupees. This is 11,400 rupees. Is my selling price after brokerage. What is my cost of this 200 shares? Very simple. Cost of 1000 shares is 50,000 rupees. What will be cost of 200 shares? Will be 10,000 rupees, right? I would be earning a profit of 1,400 rupees on sale of this shares. How we write down? Credit side, debit side, and my answer will tell. Selling price is 11,400. The date is same, 3110. Buy bank sale, 11,400, and 1,400 should be written on debit side as transferred to P&L account. 3110. There is no other transaction. I can close my books of accounts. Closing will be 800 at a cost of 40,000. You can find out the balancing figure. And what is the market price or what is the cost of this closing stock is 40,000 divided by 800? It is 50 rupees. And 60 rupees is market price, right? So I should be valuing it at cost or market price. Cost is 50, so I will be valuing it at 50. This is already valued at 50. This is closed. Even this is closed. This is similar type of question of 2.5. This is C 2.6. Next is C 2.7. A Limited purchased 5,000 equity shares, face value rupees 100 of Alliance Limited for 105 each on 1st April 2021. The shares were quoted cum dividend. So if company declares any dividend, I will be receiving that dividend. On 15th May, Alliance Limited declared and paid dividend of 2% for the year ended 31st March 2021. I told you, if it is declared in current year, the dividend always will be of previous year. Right now, which is current year 21-22. The dividend is of 2021. On 30th June 21, Alliance Limited issued bonus shares in the ratio of so and so. On 1st October, Alliance Limited issued right shares in the ratio of so and so. A Limited subscribed to half of the right and balance were sold right entitlement. The company declared interim dividend of 1% on 30th November. Right shares were not entitled to the dividend. So I'll be assuming that bonus shares is entitled to dividend. The company sold 3,000 shares on 31st December 21 at the rate of rupees 95 per share. The company A Limited incurred 2% at brokerage while buying and selling the share. So at the time of buying also you need to consider the brokerage. You are required to prepare investment account in the books of A Limited. In the books of A Limited, equity shares of A Limited. It will be number, revenue, cost. Number, revenue. On 1st April 2021, it is not your opening balance. You are purchasing it. 5,000 equity shares at a cost of 105. So 5,000 into 105 will be your cost, which will be 5,25,000, plus you are incurring brokerage. It is written that at purchase and sale you incur 2% brokerage. So 5,25,000 into 2% will be 10,500 as your brokerage. Your cost will be 5,35,500. 5,35,500 will be your cost. The shares were quoted cum dividend. On 15th May 2021, they declared the dividend. Now, how many shares I am holding right now? 5,000 shares. They have declared the dividend of 2%. So it is 5,000 into 100 into 2%. This much dividend I will be getting. It is 5 lakhs into 2%, which is 10,000 rupees. Please try to concentrate. This dividend is of which year? It is of 2021. It is for 31st March 2021. So it is for 2021. Where you owner of this debentures, owner of this equity shares in 2021. No, you have purchased it in 21-22. You have purchased this shares in 1/4/2021. That is 21-22. So this dividend received will be termed as a pre-acquisition dividend. This should be capitalized and it should be reduced from cost. Sir, then why I am receiving the dividend? The shares were purchased cum dividend and the company will pay the dividend to a person who is owner on this particular date, that is 15th of May. How to reduce it from cost? Very simple. I am receiving it, so credit side by bank. If I want to reduce it from cost, I will be writing it down in cost column. If I want to transfer it to P&L account, I will be transferring it to revenue column. It is as simple as this. Now try to concentrate. What was cost of my 5,000 shares? 5,35,500. Now automatically this cost has become 5,25,500 because on credit side I have written 10,000 rupees more. Once again, why I have capitalized it? I have received it for the period of 2021. In 2021, I was not owner of the shares, so this is an undue advantage which I am getting. I was not holding the security, but revenue of that security I am getting it, so I will be treating it as a capital revenue, capital income, and will be transferring to capital account, which is reduction in cost. Do you get it? The cost is now become 5,25,500 instead of 5,35,500. We can go ahead. On 30th June, issued bonus in the ratio of 1:5. If you are having 5, you will be getting 1. you are having 5,000 shares, you will be getting bonus of 1,000. I'm not doing a working note because calculation is very simple. Bonus shares are costing 0 and it is 30th June. On 1st October, Alliance issued right shares in the ratio of 1:12. On 110, 1:10, sorry, 1:12. Right shares. I am holding 6,000. So if you are holding 6,000, you will be getting 1/12, right? 6,000 into 1 divided by 12, 500. So I have got right to purchase 500 shares. I have not yet purchased 500 shares. I have only got right to purchase 500 shares at the rate of rupees 45. Do I purchase all the shares? No. A Limited subscribed for half of the right shares. So 250 shares I have actually purchased at the rate of rupees 5. It is 1250. Sorry, at the rate of 45. 250 at the rate of 45. It is 11,250. So I can write it down in my investment account because I'm actually purchasing the shares. 250 shares, not to right shares, to bank. In the bracket you can write down right shares. It is, date is 110. 250 shares at the rate of rupees 11,250. Are you getting it? You don't get it free of cost. What about remaining right of 250? I am still having right to purchase 250 shares, which I don't purchase, but I directly sell the right. Last time I am not selling the shares, I am selling the right. And at what rate I am selling the right is rupees 5. Right was sold at rupees 5. So it is 1250 rupees received. This is a revenue income, should be transferred to P&L account. As it is income, first it will be on credit side by bank and it will be transferred to P&L account. So 1250 in revenue column I will be writing it down. Anything transferred to P&L account I will be writing it down in revenue column. So write is done. The company declared interim dividend of 1% on 30th November 2021. So how much interim dividend I'll be receiving? Right shares were not entitled to the dividend. So I'll be getting 1% dividend on 5,000 shares, 1,000 shares, but not on 250 shares. So I am getting dividend on 6,000 shares, 6,000 shares. Let me write down over here. By bank, interim dividend is always a revenue income. 6,000 shares at the rate of rupees 100, right? Yes. Into 1% will be 6 lakhs into 1% will be 6,000. So I am getting interim dividend of 6,000. Interim dividend should always be transferred to P&L account. It is a revenue income. Why? I am holding the shares in current year. The dividend is of current year. It will never be pre-acquisition dividend. Once again, I have purchased the share in current year. What is interim dividend? It is of current year. So this dividend is also of current year. Current year, current year. I am holding it in current year. Dividend of current year. It will be a revenue income. 1%. So I can go ahead. The company sold 3,000 shares as on 31st December 2021 at the rate of rupees 95. 31st December by bank 31/12 sold 3,000 shares. Revenue column dash 31/12. I'll be doing working note. Sold 3,000 shares at the rate of rupees 95. So I would have got 3000 into 95, 2,85,000, out of which I have paid 2% brokerage. So 2,85,000 into 2% will be 5,700 as brokerage. Brokerage will be reduction from selling price. 2,85,000 minus 5,700 is 279,300 is my net selling price. Try to concentrate for cost. There's a selling price for 3,000 shares. I want cost for this 3,000 shares. How I'll find out? It is always the average. The cost of 6,250 shares. Cost of 6,250 shares. These are total shares I am having. The cost is this. What is this? 5,35,500 plus 11,250. It is 546,750. 546,750. No. Please understand, we have capitalized this and already reduced the cost by 10,000 rupees. So I'll have to reduce this cost by 10,000 rupees. So total cost of the 6,250 shares is 5,36,750. You will have to reduce this cost. If you forget it, your move marks will be cut because this is a logical error. You don't know that this is reduction from cost. You have just written it on credit side. So it is 536,750. 536,750 rupees is cost of 6,250 shares. Then what is cost of this 3,000 shares? It is 536,750 multiplied by 3,000 divided by 6,250, which is 2,57,640. 257,640. There will be profit 279,300 minus 257,640, 21,660. How I will be writing it in my accounts? This will be credited, this will be debited. Ultimately, I will be recording this 279,300. Profit of 21,660. You are required to prepare investment account. So no, nothing else. I can close my books of accounts on 31/12. No, it will be 31st March. It will be closed on 31st March. By closing, how many I am having? 6,250 minus 3,000, that is 3,250. This is closed. Closing of 3,250 will be 535,500 plus 11,250 plus 21,660 minus 10,000 minus 279,300. 279,110. How to close this revenue account? Please try to concentrate. On 31st March, I will be transferring two things to P&L account. To P&L 1250, to P&L 6,000. So that in inner column, you can write down what exactly this is. This is 1250. What was 1250? Yes, right share remuneration, right? You have sold the right to purchase the share. And this is interim. Ultimately, this account will tally. And this is your investment account with full fledged. You are having dividend, you are having interim dividend, you are having bonus, you are having right, you are having sale, and ultimately this is how you will tally the investment account. This type of questions are termed as full fledged questions, where everything of equity shares is available. Normally, full fledged questions are asked for 8 to 12 marks. So this is easy question except one point, that is pre-acquisition dividend, which also I think once you understand logically, it is not a difficult one. Next one, C 2.8. Mr. Vijay entered into following transaction of purchase and sale of equity shares of JP Power Limited. The shares have paid up value of 10 per share. So dates are given in sequence. Yes. There is purchase and sale transaction, even bonus transaction. Additional information. On 15/9/2021, that is somewhere over here, dividend rupees 3 per share was received for the year ended 31st March 2021. On 12/11/2021, 12/11/2021, 15/9/12/11 will be over here. Is it all? Company had made the right issue of equity shares in the ratio of 1 share for every 5 shares held on the payment of rupees 20 per share. He subscribed to 60% of the shares and renounced remaining right on a receipt of the premium of rupees 3 per share. Shares are to be valued on weighted average cost basis. You are required to prepare investment account for the year ended 31st March 2021 and 31st March 2022. So we need to prepare a 2 years investment account, 31st March 2021 and 31st March 2022. So let us prepare it. It is in the books of Mr. Vijay. They are equity shares of JP Power Limited. It will be number of shares, revenue, cost, number of shares, revenue, cost. So upper side, I am preparing for 2021. 2021, the first transaction is 1/1/2021. So 1/1/21, it is purchased, so to bank. Number of shares are 600. Bought at a cost of 20. ₹12,000. Next date is 15/3/2021, will come in 2021. 15/3/21. To bank, again it is purchase 900 shares at the rate of 25. So it is 22,500. Next is the 25. So it will come in next year. Nothing is there of previous year. I can tally the books of accounts of 2021. By closing 1500 shares, 12,000 plus 22,500, that is 34,500. I can tally this particular year. This is 31st March 2021. Going to next year, 1/4/2021. There will be opening balance of 1500 shares with 34,500 as cost. Next, 25/2021, 1000 shares. 25/21 to bank purchase 1000 shares at the rate of rupees 23. So 23,000 rupees. So this is 10. On 25/7/2021, bonus is received. 25/7/21, 2 bonus. It is 2,500 shares. 2,500. Bonus does not carry any cost, so cost is 0. After 25, there is dividend. 15/9/2021, dividend of rupees 3 per share was received for the year ended 31st March 2021. All right. As on 15/9/21, I am getting dividend. First, understand, if it is a normal dividend, it will always be of previous year. That is, dividend is of 2021. It is also written, received for the year ended 31st March 2021. On this date, 15/9/2021, how many shares I am holding? 1,500 opening, 1,000 which I have purchased, 2,500 bonus. Normally, bonus shares will not be getting dividend. Try to understand it logically. Bonus shares are issued by the company in current year. So company is giving this as a new share. They were not in existence in previous year. That is, in 2021, the shares were not in picture. The dividend is received of this shares will not be received by us, because company will not pay dividend on this shares, because those are new shares which are issued in 2021. Sorry, 21/22. Now you will say, sir, same happens to this. This we have purchased 1,000 shares from the company. No, this 1,000 shares we have purchased it from secondary market. There was some owner in 2021. You were not the owner, but there was some owner in 2021. So I will be receiving on this 2 particular shares. 1,500 which is opening. 1,500 opening shares. And 1,000 purchased in 21/22. 1,500. How much dividend you will be receiving? 4,500. It is 3 per share. Start. It is dividend of 2021. Were you owner of this shares in 2021? The answer is yes. It will be revenue income will be transferred to P&L account. In 2021, I was owner. Even for one day, I was owner. I have received the dividend. Owner always receives the dividend. There's nothing new in it. There's nothing capital in it. So it will be transferred to P&L account. This 1,000 into 3, 3,000 rupees. Correct. This shares, was I owner of this shares in 2021? Answer is no. Why? I have purchased it in 21/22. There was someone else who was owner in 2021. So I was not the owner. Not being an owner, still I am receiving dividend because I was owner on record date. So this 3,000 will be capitalized. That is reduced from cost. I am giving effect of both this. 4,500, I need to transfer it to P&L account by bank. Date is 15/9/21. Revenue which will be transferred to P&L account is 4,500 and reduction from cost is 3,000. Reduce from cost. So this is my total cost. If I write down something on credit side, ultimately it will be subtracted. It will be reduced from the cost. So this 3,000 is nothing but reduction in cost. Next, one more line. So there is right shares on 12/11/2021. Right shares normally purchased 12/11/2021 to bank right shares. On 12/11/2021, company made a right issue of equity shares in the ratio of 1 share for every 5 share held on payment of rupees 20 per share. For 1 share for every 5 shares held, right? 1:5. If you are holding 5, you will be getting 1. How many you are holding? You are holding 2,500. This is 5,000 and 6,000. How much you will be getting it as bonus? 1,200. Sorry, right. This will be right to purchase the shares. 1,200. You will not be receiving shares. You are having right to purchase 1,200 shares. Company made a right issue in the ratio of 1:12 on a payment of rupees 20 per share. So you can purchase at the rate of 20 per share. You can purchase it. You will not be getting free of cost. What you do? He subscribed to 60% of the shares. 60%. So 720 shares are purchased at the rate of rupees 20. Purchased 720 shares at the rate of rupees 20, 14,400. And renounce the remaining right on a premium of rupees 3. Remaining 40%. You are not selling the shares. You are selling right of 480 shares and you will be getting a premium of rupees. So how much money you will be receiving? 480 into 3, 1440 rupees premium as per AS 13, as we have learned, will be transferred to profit and loss account. It is a revenue income which will be normal day-to-day business income for a person who is normal investor in equity shares. So 1140 will be transferred to P&L account. 1440 by bank right shares. So you have purchased the 720 shares and you are getting this particular premium on remaining shares, which are 480 shares. I made a small mistake. This is 1,500, 2,500 is 4,000 plus 1, 5,000. So I was holding only 5,000 shares. Let me change it fast. 5,000. So I will be getting right of only 1,000 shares. If I get right of 1,000 shares, 1,000 into 60 will be 600 shares. This will be 12,000 rupees. So here it will be 600 and 12,000 rupees. The remaining will be 400. This will be 1,200 rupees. So this will be only. As I'm having the system, I can change the answer very quickly, but you should not make this type of mistake. This total is 5,000. I made it 6,000. Let us go ahead and understand other points. So we have done this, so these 2 points are done. Now there will be a sale transaction 2012-2021. So 2012-21 by bank sale. How many shares you are selling? 1,500 at the rate of rupees 22. You are selling 1,500 at the rate of 22. So what money you will be getting? 1,500 into 22 will be 33,000 is the selling price, minus cost of this 1,500 shares. How to find out cost of this 1,500 shares? Please try to understand. Cost of all this. So how many shares this are there? 5,600. This is 5,600, right? So cost of 5,600 shares is 34,500 plus 23,000 plus 12,000, 69,500. No, there is a reduction in cost of 3,000. So 34,500 plus 23,000 plus 12,000 minus 3,000 will be cost of all the shares. So 66,500 is your cost. Then what will be cost of 1,500 shares? This will be 1,500 into 66,500 divided by 5,600. That is 17,812. Will be cost of the shares. Hence the profit will be 33,000 minus 17,081, which is 15,188. 15,188. How I'll be writing down this on credit side, this on debit side. 1,500 shares sold at 33,000. On debit side, to P&L account on same date 20/12/2021. Profit was 15,188. Again, one transaction of sale. This one on 1/2/2022. Again, sale 1/2/2022. Buy bank sale. How many shares? 1,000 shares. At the rate of rupees 24, so it is 24,000 is selling price. I need to just find out profit. 1,000 shares at the rate of 24, so 24,000 is the selling price. Please understand, my cost remains same. Average cost remains same. Is it all? So 5,600 shares, 66,500 rupees. This cost remains same. What will be cost of 1,000 shares? All right. Do you understand? The 66,500 divided by 5,600 right now is my average cost of the shares. If I don't purchase anything, this will remain my average cost. 11.875. So this answer will be also 1,000 into 11.875. Is it all right? This will be 11,875. You can verify. 66,500 into 1,000 divided by 5,600 will be 11,875. So per share is costing 11,875. Sorry, 11.875 per share. And this remains the same till the time new shares are purchased because it is weighted average cost. So the cost is 11,875, hence the profit is 24,000 minus 11,875, 12,125. So 12,125 is profit to P&L account on 1/2/2022. No other transactions pending. I can close my books of accounts. Dividend was received previously, so now it is not received. First, I'll be telling this column. It will be, I am having this 5,000 shares. $5,600 minus 2,500. 3,100 is my 31st March 2022 closing balance. And cost of this will be 34,500 plus 23,000 plus 12,000 plus 15,188 plus 12,125 minus 3,000 minus 33,000 minus 24,000. This 36,813. What is cost per share? Let me find out. Not required, but I am finding it out. Cost per share is 36,813 divided by 3,100. It is 11.875. See, you got it? Till the time I purchase new shares, my cost will remain 11.875. If I purchase new shares at a higher rate than 11.875, my overall cost will increase. Otherwise, my overall cost will decrease. So 11.875 is the valuation even of the cost. Again, this is a full-fledged question. Question number C, 2.8. Next is 2.9. Following transaction of Nisha took place during the financial year. Purchased this 8% bonds. Interest is payable on 1st November and 1st May, so they are record date. The bonds means they are fixed interest bearing securities. Received half yearly interest on 8% on bonds. Alright, 1st May and 1st November. So even if this was not written, it was alright. 10th June, purchased 12,000 equity shares. So in one question, there is bonds also, there is equity shares also. Sold bonds, received half yearly interest. For equity shares, the information is given, and interim dividend for equity shares is given, etc. So let me segregate the both the questions. This is for bond, this is for bond, this is for shares, this is for bond, this is for bond, this is for shares, and this is for shares. So what I'll be doing is I'll be doing two sums. One is of bond and one is of equity shares. First, 8% bonds in the books of Nisha. In the books of Nisha, 8% bonds. Record date is 1st May and 1st November. It will be number, interest and cost. Number, interest and cost. Whenever it is fixed interest bearing security, number is interest is important. 1st April. So it is opening, but it is not opening. You have purchased on 1st April. So 1/4 to bank, purchased 9,000 bonds at the rate of rupees 100 each. That is, the face value is 100. Should I calculate first interest? The answer is always yes. On this 9,000 bonds into 100 into 8% into what was last record date was 1/11. So it is November, December, January, February and March. So 5 months into 5 divided by 12. It will be 9,000 into 100 into 8% into 5 divided by 12. So it is 30,000 rupees. ₹30,000. Now let us calculate the purchase price by a working note. 9,000 purchased at 80.50. There is 7,24,500. This is purchase price, and it is cum interest. So interest of rupees 30,000 is included in this. So this will be cost of debentures and this is interest which we have already written. So cost of debentures will be 7,24,500 minus 30,000, which is 6,94,500. 6,94,500 will be nothing but cost of debentures. So in cost column, I will be writing 6,94,500. As far as debenture is concerned, this is first transaction. Second transaction for bond, 1st May, you have received, on record date, you will be receiving the interest 1,500 by bank. Interest received will be, I am having 9,000 bonds into 100 into 4% because it is half yearly. So it is 9,000 into 100 into 4%, which is 36,000 rupees. See, it is good idea to understand the logic. You have received interest for 6 months. You were holder only for 1 month. You were holder only for the month of April. So automatically the 6,000, 30,000 net answer will be 6,000, which will be interest of 1 month. So a good point up till now to understand the concept of interest. 1st October you have sold 2250. 1st October sold 110 by bank sale. You have sold 2250. 2250. Should I calculate interest in fixed interest bearing security? Answer is always yes. 2250 into 100 into 8% into what was last record date? 1st of May. So May, June, July, August, September. Again 5 months. Answer will be 2250 into 100 into 8% into 5 divided by 12. It is 7,500 rupees. And we will be calculating that cost and other points. So this 2250 is sold at the rate of 81. So it is 1,82,250. 182,250, which will be selling price, sold at 81. This is inclusive of interest of this 7,500 or exclusive of interest. So this is purely a selling price of debentures. Interest will be settled separately. What is cost of this 2250? How to find out? Cost of 9,000 debentures is 694,500. What is cost of 2250 bonds? 2250 into 694,500 divided by 9,000. 173,625. Remaining will be my profit. 182,250 minus 173,625. 8625. How I will be writing down this? This on credit side, this on debit side. Ultimately, what will be recorded is cost. So 182,250. And on debit side, to P&L account on same date 110, it will be 8625. Ultimately, what is recorded is cost. So we are done with 1st October. Received half yearly interest 1st November. 111, you have received half yearly interest. 111 by bank, it is interest. How many bonds you are holding? 9,000 minus 2250. So 6750 bonds you are holding into 100 into 4%, half yearly interest. So 6750 into 100 into 4%. It is 27,000 interest you will be receiving it on bond. So now there are no transactions as far as bond is concerned. We have done all bond transaction, right? We need to close our books of accounts on 31st March. So any record date will come? No. The last record date we have recorded. So last will be 31st March. By closing, it will be 6750. Should I calculate interest? The answer is always yes. 6750 into 100 into 8%. What was last record date? Was 111. So November, December, January, February, March. 5 months into 5 divided by 12. This is interest due but not received. 6750 into 100 into 8% into 5 divided by 12. So it is 22,500. Interest due but not received. Balancing figure will be this. I will be closing. I have closed a number of debentures. Now I will be closing. Closing will be 694 500 plus 8625 minus 182250 5,20,875 is closing balance. The difference on 31st March will be transferred to P&L account, which will be 36,000 plus 7,500 plus 27,000 plus 22,500 minus 30,000, 63,000 will be transferred to credit side of P&L account. This is also done. This is point of 8% of bond. Let us go to another point, which is equity shares. So equity shares are of Moon Limited. Equity shares of Moon Limited. Number of equity shares, revenue account cost. Number of equity shares, revenue account. The first transaction happens on 10th of July. So 10th of July. The transaction is purchased 12,000 equity shares. To bank 12,000 equity shares. Purchased 12,000 equity shares of rupees 10 each for rupees 44 through a broker who charge a 2% brokerage. So 12,000 into 44 will be my cost price. 5,28,000. Broker will be charging 2% brokerage. So 5,28,000 multiplied by 2%. It is 10,560. This is 560. 5,38,560 will be cost of this equity shares. 538,560. No need of interest because it is not a fixed interest bearing security. No record date. I've done this. 15th Jan directly. 15th Jan to bank. They are right shares. Moon Limited made a right issue of 1 equity shares for every 4 shares held at the rate of rupees 5 per share. Nisha exercised the option for 40% of her entitlement and sold the balance right at 2.25 per share. This is at the rate of 5 per share. Because previously you have purchased at 44. The market price might have decreased. Let me verify first. No, it is clarified. It is 5 per share. Alright, let me do the working note for right shares. Right shares. If you are holding 4, you will be getting 1. If you are holding 4, you will be getting 1. You are holding 12,000. How many you will be getting? 12,000 divided by 4, which will be 3,000 shares. Shares you will be getting, or right to purchase you will be getting? Right to purchase at the rate of rupees 5, out of which you exercise the option for 40% of right entitlement. So 40% you purchase at the rate of rupees 5. 40% is 1200 into 5, which is 6000 rupees. You can write it down in your investment account because you are actually purchasing it 1200 shares at the rate of rupees 5, which is 6000. Balance 60%, that is 1800 shares is 5400 rupees. You are selling the shares. No, you are selling right to purchase the shares in the market. Right to purchase the shares is 1800 shares. You were having the right, you are giving it to someone else at the rate of rupees 3. So 5400 you will be receiving, which should be transferred to P&L account. So it is by bank 15,1, 5400 rupees. Sorry, it is not at 3, it is at 2.25. So this is not at 3, it is 2.25. What will be the figure? 1800 into 2.25. 4050. So 4050 will be taken to be received from bank 4050, and this is end of right. So this we have done. 15th March received 18% interim dividend of Moon Limited. Now interim dividend is very easy. You can just get the dividend on all the shares. Now it is not written on which shares it is received. Whether it is received on all the shares, we have received right shares also. So on right shares, whether this dividend is received or not, because it is interim dividend, normally you should assume that it is received on all the shares. So how much dividend I am receiving? Dividend I am receiving is 18%. So I am holding right now 13,200 shares of 10 rupees each and 18% dividend. So this will be my interim dividend. Interim dividend is always transferred to P&L account. 13,200 into 10 into 18%. It is 23,760. 23,760 will be 23,760 is by bank interim dividend. Date is 15th March. No other points are pending. I can close my books of accounts. This is 13,200. Closing as on 31st March will be 13,200. This will be 538, 560 plus 6,000, 544, 560. See how this will be transferred to P&L account. On 15th of January to P&L account, right shares subscription, right sold 4050, and on 15th of March also it will be transferred to P&L account, which is interim dividend of 23,760. So the answer will tell you. See, this question is a combination of fixed interest bearing security and floating interest bearing security. So a good question to be asked in examination because it tests both of your knowledge, fixed interest bearing as well as floating interest bearing. As far as revision is concerned, also it is a good question because it gives a comparative view of fixed interest bearing security and floating interest bearing security. Way of solving fixed interest bearing security, we always calculate interest last record date to transaction date. Equity shares, we never calculate revenue, income, interest because there is no record date. So a good sum, C 2.9. Before understanding next question, let us learn some theory of accounting for investment. Accounting for investment is accounting standard 30. There are two types of investment. Long-term investments, where your objective is to carry this investment for a long period of time. Short-term investment or current investment, where purpose of your investment is trading in that investment and earning profit. Long-term investment will be valued at cost. So long-term investment, if there is a reduction in market price, increase in market price, that revaluation will not be made. But see, because of some reason, there is a permanent reduction in value of investment, that can be written off in profit and loss account. This is provided under AS 13. It is also provided that if that situation no longer exists because of which you have written down your assets, then you can upward revalue this asset up till cost. This is what is written in AS 13 as far as long-term investment is concerned. Let us go to current investment. Current investment valuation will be done at cost or fair value, whichever is less. So it is same like your a stock, closing stock or inventories, where you value your inventories at cost or market price or fair value, whichever is less. Actually, there is a difference between fair value and market price. Let's not discuss it right now, but it is cost or fair value, whichever is lower, the current investment will be valued. Let us understand reclassification. Say if you want to reclassify your current investment into long-term investment, so up till this point of time it was current investment. Your normal objective was to trade in that particular securities, but now you want that you will be keeping it for a long period of time and you want to reclassify your current investment into long-term investment. There will be a value of current investment in your books of accounts. How it will be converted into long-term investment? At same value or at different value? It will be reclassified at cost or fair value, whichever is low. So say current investment right now is 10 lakhs. Cost of it is 12 lakhs and fair value is 9 lakhs. Then it will be valued at cost or fair value, whichever is lower. So from now it will be valued at 9 lakhs and it will be converted into long-term investment or reclassified as long-term investment. If you want to reclassify your long-term investment into current investment, see what does AS 13 provides is you can reclassify at cost or carrying value, at which you are carrying your investment at books of accounts, whichever is lower. So whatever this value is, say it is 10 lakhs, your cost is also say 10 lakhs and your carrying value is say 8 lakhs, then Whenever it is reclassified as current investment, it will be valued at 3 lakhs, which is cost or carrying value, whichever is lower. So this is the reclassification of long-term investment into current investment and current investment into long-term investment. Remember, current into long-term investment is cost or fair value, whichever is lower, and long-term investment to current assets is cost or carrying value, whichever is lower. Let us start the question. Question C 2.10. On 15th June 2018, Y Limited wants to reclassify its investment in accordance with AS 13. Decide and state the amount of transfer based on the following information. So, first let us draw that fundamental reclassification from long-term investment to current investment. It is a cost or carrying value, whichever is less, and from current investment to long-term investment, it is a cost or fair value, whichever is less. Please understand, all this value should be taken as on the date of reclassification and not at the year end or any other date. On the date of reclassification, we will be doing reclassification also, will be changing the value of the investment also. A portion of long-term investment purchased on 1st March 2017 are to be reclassified as current investment. So long-term investment into current investment, this portion. The original cost of this investment is 14 lakhs. So cost is 14 lakhs, but has been written down by 2 lakhs rupees. So now it is carried in the books of accounts at 12 lakhs. The market value of this investment on 15th June 2018 was 11 lakhs. Market value as on the date of transfer in this case is not important. Market value does not play a part. Only cost and carrying value takes a part, whichever is less is 12 lakhs. So from now onwards, this investment will be reclassified at current investment at what rate? 12 lakhs rupees. Second one. Another portion of long-term investment on 15 January 2017 are to be reclassified as current investment. Same, long-term investment into current investment. The original cost is 7 lakhs but has been written down to 5 lakhs. So original cost is 7 lakhs, written down to 5 lakhs, whichever is less, it will be reclassified at 5 lakhs. The fair value is given, even fair value is not important as far as this position is concerned. Now onwards, the asset will be classified as current investment at 5 lakhs rupees. So if it was 6 lakhs, you will write it down by 1 more lakhs and you will be reclassifying at 5 lakhs rupees. A portion of current investment purchased on 15th March for rupees 7 lakhs are to be reclassified as long-term investment. So it is current investment to long-term investment. The cost is 7 lakhs. As the company has decided to retain them, the market value of this investment on 31st March 2018 was 6 lakhs. Now, if fair value is not given, I will be taking market value as fair value, but fair value is given. Fair value on 15th June is 8.5 lakhs. So fair value is 8.5 lakhs. It will be reclassified at 7 lakhs. Now onwards, this investment will be long-term investment valued at 7 lakhs rupees. Another portion of current investment purchased on 7th December 2017 for rupees 4 lakhs are to be reclassified as long-term investment. So it is this current investment to long-term investment. The cost is 4 lakhs, are to be reclassified as long-term investment. The market value of this investment as on 31st March, we are not concerned about 31st March. I want value as on 15th June. 15th June is 3.8 lakhs. Now here fair value is not given. I will be assuming market value is fair value. So I'm considering this as fair value. What is the fair value? 3.8 lakhs. I want fair value only. Whichever is less. Now onwards, the investment will be long-term investment valued at 3.8 lakhs rupees. So when it is current investment to long-term investment, it is cost or fair value, whichever is lower. When it is long-term investment to current asset, it is cost or carrying value, whichever is lower. At this rate, it will be valued after reclassification. Next question, 2.11. Again, this is a normal fixed interest bearing security question. Let us just revise it. Mr. Hirsch provides the following details relating to his holding on 10% debentures, face value rupees 100 of X Limited held as current assets. On 1/4/2018, there is an opening balance. 1/6/2018, there is purchase. 1/11 purchase. 31/1 sold. 31/3 they have just given market value. Due dates of interest are 30th June and 31st December. Brokerage of 1% is to be paid on each transaction. So for purchase also we will have to draw working note. For sale also we will have to draw working note. Mr. Hirsch closes his books on 31st March 2019. Show investment account as it would appear in his books, assuming FIFO method is followed. Alright. So 10% debentures, investment account I will be preparing. 10% debenture account. Record date is 30th June and 31st December. Number of debentures, interest, cost. Number of debentures, interest and cost. Interest and cost are in rupees. Number of debentures is just a information. Let us start doing the question. 1/4/2018 opening balance. How many debentures? 12,500 debentures. Will I calculate interest? The answer is always yes in fixed interest bearing security. So it is 12,500 into 100 into 10% into what was last record date was 31st December. January, February, March, 3 months, 3 divided by 12. So it is 12,500 into 100 into 10% into 3 divided by 12. It is 31,250. What is cost of this debentures given is 12,25,000. This was opening balance. On 1/6/2018, let me do it over here. Purchase 9,000 debentures at the rate of rupees 98. 1/6/2018. So there will be no record date first in between. 1/6/18 to bank. How many debentures? 9,000 debentures. Will I calculate interest? The answer is always yes. 9,000 into 100 into 10% into 5 divided by 12. It is January to 31st May. It will be 9 lakhs rupees multiplied by 10% into 5 divided by 12. 37,500. Will be interest. Will be paid separately. Let me draw this working note. 9,000 into 98 is my purchase price. 8,82,000. It is X interest. So this figure does not include interest. It is purely for debentures. But I will have to add 1% brokerage. 1% brokerage will be 8,200. Total will be 88,200 plus 8,200. It is 96,400. Total cost of this particular debentures 96,400. Next one, 111. Before that, there will be 30th June record date where I will be receiving interest. 30th June by bank, I will be receiving interest on 21,500 shares into 100 into 5% will be 21,500 into 100 into 5%, 1,07,500. Next date will be 1/11/2018. 1/11/2018, purchased 12,000 debentures at the rate of rupees 115. First, let us draw over here. 1/11/2018 to bank, purchase 12,000 debentures. Should I calculate interest? The answer is always yes. 12,000 into 100 into 10% into, which was last record date 30th June, July, August, September, October. So 4 months. This will be my interest. 12,000 into 100 into 10% into 4 divided by 12. 40,000 rupees. Let us go again to working note. I have purchased it at 12,000 into 115. So I have purchased it at 13,80,000. I will be charged 1% brokerage. So 1% brokerage will be 13,800. Total what will be charged as 13,80,000 plus 13,800 which is 13,93,800. Here also there is some problem. This is 8,82,000. This should be 8,82,000 plus 8,200. This is 8,90,200. Eight lakh 82,000 plus 8,200. It is 8,90,200. Yes, this is incorrect. 8,90,200. Other information I think was correct. I'm just making some procedural error. Let me verify this. This will be 8820, right? So 8,82,000 plus 8820 will be 8,90,820. 8,90,820. 8,90,820. Yes, now it is correct. Here 1/11/2018 it is 13,80,000. 13,800 is a correct figure. So my total including brokerage is 13,93,800. But they are saying it is come interest. So this figures includes interest. And what is my interest portion? Interest portion is 40,000. So 40,000 will be deducted from it. So my cost of debentures including brokerage but excluding interest will be 13,93,800 minus 40,000. 13,53,800. It is 13,53,800, which is correct answer. 13,53,800. So this is 1/11/2018. Next is 31st January 2019. Before that, a record date will come, which is 31st December. 31/12 by bank. I will be receiving interest on more 12,000. That is 12,500 plus 9,000 plus 12,000. So 33,500 debentures into 100 into 5%. 33,500 00 multiplied by 5%. It is 1,67,500. 1,67,500 interest I am going to receive on 31/12. Let us go to next, which is 31st Jan. 31st Jan sold 13,500 debentures. Come interest. Sold 13,500 at the rate of 110. First, let me go to investment account. 31st Jan by bank sold 13,500 debentures. Should I calculate interest? Answer is always yes. So 13,500 into 100 into 10% into 1 divided by 12. Last date was 31st December. This is 31st January. It will be 13,500 into 100 into 10% divided by 12, which is 11,250, which is my interest. All right, let me calculate this. 13,500 into 110 is 14,85,000 minus 1% brokerage, because brokerage is included in this figure. Sorry, brokerage will be deducted from sale and added to purchase. When it was purchase, it was our expenditure, so we added it. When it is sale, still it is our expenditure, so we deduct it. It will be 14,850. 14,85,000 minus 14,850. It is 14,70,150. 14,70,150. Now they are saying this is cum interest. So it is the selling price of debenture plus interest. They are saying it is cum interest. So I will deduct interest from this, which is 11,250. So my net selling price will be 14,70,150 minus 11,250. 14,58,900. 14,58,900. So 13,500 debentures sold at 14,58,900. I will have to find out profit or loss. For that, I will need cost of this 13,500 debentures. Which method I will be using? FIFO. Yes. So how to find out cost of 13,500 by FIFO method? I will be taking 12,500 opening balance. The cost is 12,25,000 and 1,000 from this. Now what is cost of this 9,000 debentures? Is 8 lakh. Let me write it down. What is cost of this 9,000 debentures? It is 8,90,820. Then what will be cost of 1,000 debentures? Will be 8,90,820 multiplied by 1,000 divided by 9,000. It is 98,980. 98,980, which will be cost of 1,000 debentures. 98,980. Total cost of this 13,500 debentures by FIFO method will be 12,25,000 plus 98,980, which is 13,23,980. 13,23,980 will be cost of this 13,500 debentures. 13,23,980. I will be getting answer of profit. What will be profit is 14,58,900 minus 13,23,980. 1,34,920. 1,34,920. So 1,34,920 is profit to P&L account. It is profit, right? Yes. 134,920. How I present this? I write down this on credit side. I write down this on debit side. Ultimately, what is recorded is cost. This was my profit, 134,920. I'm rubbing this cost column. And this was 31st January. I don't think there is any other transaction. Yes, on 31st March, there is just closing value. Due dates, 1% of brokerage I have considered in each and every point. FIFO method I have considered, I can close my books of accounts. The closing will be done on 31st March by closing. How many debentures I will be having? 8,000 plus 12,000 is 20,000. Should I calculate interest? Always yes. 20,000 into 100 into 10%. Last record date was 31st December. So 3 divided by 12, which is 20,000 into 100 into 10%, 1/4, 50,000 rupees. This is interest due but not received yet. What is this cost of 20,000? This will be closed. This I normally find out as a balancing figure. Balancing figure will be, alright, I'm just writing down the balancing figure in my working note. 12,25,000 plus 8,90,820 plus 13,53,800 plus 1,349,20 minus 14,58,900. 21,45,640. 21,45,640. What is cost per debentures divided by 20,000? 21,45,640 divided by 20,000. So it is 120.782. It is 120.78. What is the market price? 115. Right? So I'll change this figure. But before that, let me tally my interest column and just wind up my interest column. 31st March to profit and loss account. $1,07,500 plus 167,500 plus 11,250 plus 50,000 minus 31,250 minus 57,500 minus 40,000. It is 227,500. will be transferred to P&L account. Interest column is tallied. Start. Now, what is cost of this 20,000 debentures? Cost of closing stock, which is 20,000 debentures, is 21,45,640. 21,45,640. What is the market price of this debentures? It is 20,000 into 115. It is given. It is 115. So what is market price is 20,000 into 115. It is 23 lakhs. Twenty thousand into 115 is 23 lakhs. How it is coming this? $21,45,640. 21,45,640 divided by 20,000. This is cost. Yes, it is 107.28. 107.28. Cost is lower. If the cost is lower, it should be valued at cost or market price, whichever is lower, it is lower, and so we have valued it at cost. This is investment account, normal investment account. We are having fixed interest bearing securities. Some was change point in this question was to find out this cost of 13,500 debentures, which was found out from 2 lots opening balance plus 1,000 shares from additional purchase. Question number C 2.12. This is a theoretical question. A Limited invested in shares of XYZ Limited on 1st December 2019 at a cost of rupees 50,000. Out of this, 25,000 shares were purchased with an intention to hold for 6 months. So rupees 25,000 shares of total 50,000 shares are current investment. Remaining 25,000 will be long term. A Limited also purchased gold. Gold should normally treated as long-term investment because it is generally purchased for a long period of time. Rupees 1 lakh. Yes, if someone is trading in gold, it should have been specifically written. Same as silver. It is 30 lakhs. First of the market value as on 31st March above investment. So the question is of valuation. The shares are valued at 47,500. Rupees 47,500. So market price of this is 47,500 divided by 2. 50% are current investment and 50% are 23,750. Market price of this is 23,750. Market price of gold is 1,80,000 and this is 30,50,000 market price. Valuation. Current investment should be done at cost or market price, whichever is lower, so it will be 23,750 rupees. Long-term investment, if there is no if there is no permanent decline, we should not lower it. This is just a temporary decline. If there is a temporary decline, long-term investment will be valued at cost 25,000. Gold is valued at cost. Again, there is an increase. That increase will not be recording. So it will be valued at cost. Silver will also be valued at because it is long term. So long term investment cost, if there is a permanent decline, I'll reduce the value. Otherwise, I'll not reduce the value. So in gold, this long term investment, it will be at cost. And in current investment, it will be cost or market price, whichever is lower. Let us go to next question, 2.13. This is full-fledged question of equity shares. On 1st April 2019, Mr. H had 30,000 equity shares of ABC Limited at a book value of rupees 18 per share. Face value is 10. On 10th June 2019, he purchased another 10,000 equity shares of ABC Limited at 16 per share through a broker who charged 1.5% brokerage. The director of ABC Limited announced a bonus and a right issue. The terms were as under. Bonus shares were declared at a rate of 1 equity shares for every 4 shares held on 15th July 2019. Right shares were to be issued to existing equity shareholders on 31st August. The company decides to issue 1 right shares for every 5 equity shares held at 20% premium, and the due date for the payment will be 30th September. Shareholders were entitled to transfer their rights in full or in part. No dividend was payable on this issue. So in bonus also and in right also, dividend is not payable. Mr. H subscribed for 60% of the right entitlement and sold the remaining right for the consideration of rupees 5 per share. Dividends for the year ending 31st March 2019. As I told you, the dividend are always of previous year, were declared by ABC Limited at a rate of 20% and received by Mr. H on 31st October 2019. On 15 January 2020, Mr. H sold half of his shareholdings at 17.5 per share and brokerage was charged at 1%. You are required to prepare investment account in the books of Mr. H for 31st March 2020, assuming the shares are valued at average cost. So it is a normal full-fledged questions of equity shares in the books of Mr. H. In the books of Mr. H, and it is equity shares of ABC Limited. Equity shares of ABC Limited. Number of shares, revenue, cost, number of shares, revenue, cost. We can start our question from opening balance 1st April 2019, 1/4/19. Opening balance is 30,000 equity shares. At a book value of 18 per share. So 30,000. Just 5,40,000. Face value is 10. On 10th June 2019. So 10th June 19. This was opening. He purchased another 10,000 shares to bank. 10,000 shares. At 16 per share through a broker who charged 1.5% brokerage. So 10,000 into 16 is 1,60,000. Brokerage is 1.5%. 1,60,000 plus 1.5%. It is 1,62,400. So 1,62,400 is the cost of this. Which is on 10th June 2019. So this we have done. The directors of ABC Limited announced bonus and right issue. The terms of a issue were as under. Bonus shares were declared at a rate of 1 shares for every 4 shares held on 15th July 2019. So 15th July 2019, 2 bonus, 1 for every 4 share held. If you are having 4, you will be getting 1. If you are having 40,000, you will be getting 10,000. The cost of bonus shares is 0. Right shares were to be issued to existing shareholders on 31st August. The company decided to issue 1 right for every 5 shares held. So right shares, if you are having 5, you get 1. You are having 50,000, 30, 40, 50. You are having 50,000. What you will be getting is 10,000 right to purchase share. And you can purchase at 20% premium. Premium is calculated always on face value. 20% on 10 rupees will be 12 rupees. So you can purchase this right share at the rate of 12 rupees. However, you are not purchasing all 10,000 right. Due date 30th September, no dividend was payable. Mr. H subscribed for 60% of the right entitlement. So he purchased 6,000 shares at the rate of rupees 12. It is 72,000 rupees. Will come in my investment account because 6,000 shares are actually purchased. The date is 30th September. To bank, in bracket you can write down right shares. Actually you are purchasing it at 72,000 and sold the remaining right for the consideration of 5. Remaining right is 4,000. What you are selling, shares or right at the rate of rupees 5, which is 20,000 rupees. This is the revenue income should be transferred to profit and loss account. 20,000 rupees by bank 30th 9/19, and that is right shares. They are not right shares sold, they are right sold. I was having right to purchase this 4,000 shares. Instead of purchasing this 4,000 shares, I am selling the right to purchase the shares at the rate of rupees 5. This is all for right shares. Dividend for the year ended 31st March 2019 was declared at a rate of 20% and received by H on 31st October 2019. So, on 31st October 2019, first, you will be receiving dividend on this 30,000, yes. You will be receiving dividend on this 10,000, yes. On this too, no, because it is specifically written that dividend is not payable on the shares. So you will be receiving dividend on 30,000 shares, which was opening, and you will receive dividend of 10,000 shares, which you have purchased in the year 1920. Dividend belongs to which year? Dividend will always belong to previous year. Dividend for the year ended 31st March 2019. So dividend is of 1890. How much dividend you are receiving? You are receiving dividend at the rate of 20%. So on this 30,000 shares, you will be receiving dividend on 30,000 into 10, which is face value, into 20%. So this is 3 lakh into 20%, which will be 60,000. On this, you will be getting 10,000 into 10 into 20%, which will be rupees 20,000. A simple point for pre-acquisition dividend is, were you owner of the shares in 1819? Were you owner of the shares in 1819? Question mark. The answer is yes. It is our opening balance. So in previous year, we were owner of the shares for whatever period, but we were owner of the shares. If we were owner of the shares, it is a normal income. I was owner in 1819. I got income of 1819. It is a normal thing. It will be transferred to profit and loss account. So 60,000 will be transferred to revenue account, that is profit and loss account, by bank. This is dividend. And this 20,000, was I owner of the shares in 1819? The answer is no. Still I have received this dividend. It will be regarded as a pre-acquisition dividend, and it will be reduced from cost. How to reduce it from cost? Write it down in cost column, credit side. The cost will be automatically reduced. Let's start. This is all for dividend, pre-acquisition dividend. We have done it n numbers of times. On 15th January, he sold. So by bank, 15th January, it is sale. Half of his shareholdings. Half of his shareholdings. And what is his shareholdings? 30, 40, 50, 56,000. So he sold 28,000 shares at a rate of 17.50. shares into 17.50, which is 4,90,000 selling price. But before brokerage, there is a brokerage. Brokerage is my expenditure. It will reduce my selling price. And brokerage was charged at 1%. So 1% brokerage will be 4,900. So my net selling price will be 4,90,000 minus 4,900, which is 4,85,100. 4,85,100. This is my net selling price. I will have to find out cost of this 28,000 shares. How I will find out? Cost of 56,000 shares, total shares, is rupees how much? How to find out cost of this 56,000 shares? This minus 20,000. Don't forget this. It is reducing the cost. You will have to reduce the cost. So 5,40,000 plus 162,400 plus 72,000 and minus reduction in cost is 20,000. So it is 754,400. It is 754,400. I want cost of 28,000 shares. It will be how much? You can do cross multiplication. You will be getting the answer. 754,400 divided by 56,000 multiplied by 28,000, which is 377,200. 3,77,200 rupees is cost of 28,000 shares. 3,77,200. So there will be a profit. 485,100 minus 377,200 is 1,07,900. 1,07,900. How will be writing down in our investment account? Selling price on credit side, profit on debit side. Ultimately, what I'll be recording in cost column is cost. So 485,100 on credit side. How many investments are sold? 28,000. And on debit side, I'll be transferring remaining to P&L account. It is 15th January 2019. 1,07,900. No other points are pending. I can close my books of accounts on 31st March. By closing will be 28,000 because half of the holding was sold. If half is having a cost of 3,77,200, other half will be also having cost of 3,77,200 only. So it will be 3,77,200 will be cost, or you can find out balancing figure, it will be same. This 20,000 will be transferred to P&L account, right sold, and 60,000 will be also transferred to, which is this will be on 31st March, this will be on 31st March. This is full-fledged question, a good question, but this does not have interim dividend. If it was having interim dividend, all the points of equity shares would have been covered. If it was interim dividend will be received on all the shares and will be transferred to P&L account, that is revenue account in our case. Next question, C 2.14. Again, a theory question of reclassification. Kunal Securities Limited wants to reclassify its investment in accordance with AS 13. State the values at which the investment have to be reclassified in the following cases. So there are 4 cases. First, let me draw the chart of reclassification. If I want to transfer long-term investment into current investment, I will be transferring it at cost or carrying value, whichever is less. But if I want to transfer current investment into long-term investment, it will be transferred at cost or fair value, whichever is less. This is what is written in AS 13. But as a student, you should also sometimes go in detail of the question why. I'm not solving it, but you should go into detail why long-term investment into current investment is cost or carrying value, whichever is lower, and current investment to long-term investment is cost or fair value, whichever is lower. Long-term investment, I'm solving one by one. Long-term investment of the company A costing 10.5 lakhs to be reclassified as current investment. So it will go in this. The cost is 10.5 lakhs. The company has reduced the value of this investment to rupees 9 lakhs. So carrying value is 9 lakhs, which is permanent decline. The fair value on the date of reclassification is 9.3 lakhs. If the fair value is 9.3 lakhs, fair value is not important as far as classifying long-term investment into current investment, whichever is less as 9 lakhs, and so it will be valued at 9 lakhs rupees. Number 2, long-term investment in company B. So again, let me change the color, but it is long-term investment to current investment. Costing 14 lakhs is to be reclassified as current investment. The fair value as on the date of reclassification is 16 lakhs and the book value is 14 lakhs. So carrying value is 14 lakhs. Fair value is not important, and so it will be valued at 14 lakhs or 14 lakhs, whichever is less. In question number 2, it will be 14 lakhs. In 1, it is 9 lakhs. Current investment in the company C. So it will be current to long term. Current to long term is this. Costing 12 lakhs is to be reclassified. Costing 12 lakhs is to be reclassified as long term investment as the company wants to retain them. The market value on the date of if fair value is not given, market value can be taken as fair value, will be 13.5 lakhs. It will be valued at 12 lakhs rupees. This is question number 3. Current investment in company D costing rupees 18 lakhs. This is 4th. Costing rupees 18 lakhs. Is to be reclassified as long-term investment. The market value is 16.5 lakhs. It will be valued at 16.5 lakhs on the date of reclassification. A very simple question of reclassification. This was the last question. How to revise investment account? A small hint on it. Do one full-fledged question on fixed interest bearing security. Learn the concept, how to calculate interest, what is the logical idea of the interest, what actually is transferred to P&L account, each and everything. Choose a question which is having even brokerage and all other points like purchase or sale. Do one of FIFO, one of LIFO. 2 questions are enough in this. As far as revision is concerned, do question of equity shares having bonus, right, dividend and interim dividend. Each and every point, purchase and sale. So there will be pre-acquisition and there will be normal dividend also. Do one question, full-fledged question. One question is enough. Do theory of valuation as well as reclassification. This will be end of investment account.